Good morning. Welcome to Risk Neutral Trading. This is my this stream is my virtual trading journal. I start every morning, every trading day at 8 o'clock, 0800 Central Standard Time. All the times on my charts and my my monitors and that I refer to are Central Standard. So bear that in mind. This stream is not for financial or trade advice. It is my virtual trading journal. I do that because I believe journaling is important, and I don't multitask well or want to dilute my focus on the market through the day by doing screen snaps and typing and things like that, or making notes in a journal. This is perfect. It captures everything I'm looking at in the video, and my voiceover here provides insight as to what I was thinking. Works for me, right? And again, it's my virtual trading journal. I'm not funded or monetized in any way with YouTube. So, you know, your likes and subs and comments in the chat are great or on the stream. I share this on YouTube and openly for a couple reasons. Number one, it provides or adds another layer of transparency and full accountability. The stream lasts from 8 o'clock in the morning now until cash close at 1500 every afternoon. I share the entire monitor. I stream the monitor so you can see any program that I have open at the bottom here. And you can also see my computer clock, hour, minute, seconds, and the date, which ties up with both Bookmap and IRT. The function here is to eliminate as much any question of transparency or accountability. Again, it's my virtual trading journal, so why would I want to BS myself? You know, why would I want to trick myself? That's not the point. Anyway, so let's see here what we have going on now. We have the reports, which are pretty limited, obviously, because the government is on strike. It's the 9th of October. I'm sorry, 2025. I forgot that part. And I use a couple of news sources and reports. This is investing.com, which is completely free. I like the presentation here, and it's good for screen snapping or putting somewhere else, you know. And this is important. Fed Chair Powell is speaking, but he is just giving opening remarks at a Fed banking conference, which is going on all day. So I don't think this is going to be any kind of a market mover or any big surprises. But remember that anytime the Fed Chair Powell is speaking, that's why it's 3 stars. And then we have, you know, talking feds and whatever else is going to happen the balance of the day. You can filter this for your time zone, your region, what reports you like, blah, 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 blah. This is the upcoming reports for the week. Now, this is pretty interesting here to me because they have put non-farm payroll back on the docket here at 7:30 for tomorrow. That will not be the case, I don't believe, as long as this government shutdown continues. Remember that the non-farm payroll is scheduled the first Friday of every month, except 1 or 2 little exceptions, and it was supposed to be last Friday. But because of this juvenile delinquents in the government, running the government back there, it was canceled last week. Now, investing.com has put it back into the docket. Financial Juice, the other news source which I use, also free, is, we're getting stuff here now. We're getting political risk updates, so that's good in Financial Juice. It has a similar docket here, and then it has more of a squawk box feel on this side. Now, you'll see that we have... This is the Fed Community Banking Conference all day. It doesn't say Jay Powell speaking. Oh, there we go. it's a pre-recorded speech also. So that's something else ahead of this. This is new. This wasn't on here 20 minutes ago. This Trump hosts cabinet meeting. How could he I don't understand that. Bissett is talking. Bowman is talking. Kashkari is talking. Trump is going to have another Mike moment here at 1400. These are not any kind of political statement, but you need to be really careful anytime the government or the administration, particularly Trump, gets near a microphone or a camera, because it is not clear what may or may not be said, which is a risk for our trading. It can disrupt the auction. That's the only reason I am focused on it, because it's, we pay attention to when non-farm payroll is coming out, because it has a huge focus. It has a huge impact on the market, typically on our auction, the current auction. That's the same case with some members of the government, especially Trump, making some sort of a statement or hosting a cabinet meeting, and there's nobody knows what may or may not be said. So it is even a greater risk to our auction than the possibility of a number that we already know. Okay, let's do the pre-market now. Get that out of the way. So what are we doing here? Well, this is the full session. This is IRT, my charting package. There is yesterday's RTH session. We closed right at the highs. Typically, we would assume that we would continue on. We got everybody suckered into a long and then went short on them. Basically, a chop fest all night. Inventory is basically 100% short. Here's where we closed and opened, and look what we've done as far as trading. Here's the volume all below our open, right? That means the inventory overnight is essentially short. To me, that signifies that we may have profit taking in the form of responsive buying to cover the shorts. It's kind of a coin flip. Are we short? Are we even? Are we short? Are we even again? It's, I think it's probably more likely that we'll have a balanced rotational kind of a day today, but you never know. That's, those are my, and that's another good reason that you never predict anything. You can anticipate, but you should never predict. So this is the ES mini. This is the NQ mini, and this is my higher time frame chart, which I call the micro composite. It is an RTH session only chart, and these are daily candlesticks. Wherever price overlaps, I draw a volume profile around them. And that, in so doing, generates the high and low volume nodes, which push automatically to bookmap. A micro composite VPOC, I enter manually, all-time high, low, all that kind of thing. This is the market profile chart for the ES. Bookmap, IRT also pushes the session prices to bookmap. Now, what are we within? Looks like the volume is probably about normal. Let's check. I got this wrong every time I looked yesterday. Oh, light, 78%. So we're under volume for this time of day, and our average true range is only 1.75 points in a 5-minute candle. Okay, bookmap. Well, obviously, if you don't know, this is the dome or the order book. All the resting liquidity either side of the price. This is current price, and there you are. This is the micro composite column where I enter these values manually. And now we have a new ETH high up here. This is a new all-time high. Put in the ETH on whatever yesterday was, the 8th. So they're going to keep playing leapfrog, all right? The RTH people hate that, so they're going to jump up over the top of these guys, I'm sure. All right, that's my prediction for you. This is the naked volume point of control for the most recent RTH auction, which is, in other words, where this is the POC where we closed RTH session yesterday. These are the high and low volume nodes in this column. The full session volume profile here, which started plotting at 1700 last night and will continue through 1600 today. It's the full session, not the overnight. This would be considered the Globex, I guess. RTH volume profile, which will reset this morning at 8:30. And this is my notes column, which is pretty important to me. Now, for the last 2 days, we've opened higher in range. The first thing I do is set the column title to the open type I'm expecting. Well, right now we're lower in range. The way you anticipate that or determine that has only got two criteria. Number one, if we opened right here, right now at this price, which is 68.02, how would that compare to the previous RTH close? Right there. It's lower than the close. And the second criteria is how does it compare to previous RTH range? It's in range. If we opened right here, right now, we would be lower in range. Let's pretend that that's it. So I changed the column title to reflect the open type that I expect. Then I clear, and that will dictate which statistics we apply to the associated session prices, as I do every morning, and here's yesterday. So what I'm going to do now is clear the notes, and we'll start over. This is the from IRT. These are the session prices. You'll notice there's no indicators on my charts or my book map. There is only a POC for the full session and the RTH session. POC is nothing more dramatic than the price at which the most contracts have traded so far in the session. Okay? So far in the session, the most contracts in the overnight session have traded at 61, whatever that is, 68.01, right there, 4,745. The minute one of these levels up here changes, that's actually not correct because this is 47.82, so there's a value in here I'm missing. And there we are back up again. Now it's traded back up there, so that's correct. That's how it works. It's just the line plots where we've been, and it's a stepped line. So you get a sense of feeling for that, but it's the real POC is just the price. That's it. There is a VWAP for both RTH and Globex. There's a mid for the RTH session, and a couple of lines that sometimes cause confusion are the IB high and low because of the naming. It's an old market profile acronym for initial balance. What the IB high and low really represent is nothing more than the high or low of the first 1 hour of the RTH trading session. That's it. And then these, gradations or these lines or this fill over here is representing liquidity in the book. That's the way it works. So there we go. Now let's look at the statistics. And the statistics work like, hold on, I got to make sure I get the chart going here. 14 statistics are from this study. Yesterday, you see IRT, conveniently highlights the correct open type, but only after 8:30. So we're assuming this morning from our little analysis there that we're going to open lower in range. The study is, like everything else I do, simple, straightforward, data-driven, statistics and probabilities. We look back at 2,000 trading days. Of these 2,000 trading days, we opened lower in range, 500 and whatever that's it. It says mine are bad. 88 of them. Of the days where we open lower in range, price revisited the overnight volume point of control 400 and whatever that says, 96 times or 84.4%. Overnight volume point of control just happens to be under the previous value area high here, so we know that. We're going to go 84.4. And that is exactly all there is to it. And then I will simply go down the list. The next order of business will be the overnight mid, and that's 83.3. Overnight mid also hiding over here, right there. 83.3. Boom. Previous close, 73.8. Yeah, there we have one we can actually see. One of the things that I forgot to mention here, I try to keep the price scale at 1 point high, like there, and I keep the entire session in view, and I do that by Blue Boy over here. I put this blue vertical line on at the open of each session, and then this serves as a visual reference for me. If I glance left and see that blue line, I know I have the entire session in view, so I have a firm understanding of the context. I forgot that earlier. Close. What do we got next? Oh, great. Overnight high. Oh, wait a minute. Yeah, the IB high is 70.4, and the reason I want to put this in here is to show you this. And I put the initials like that because, remember the definition, the minute we open the RTH session, this is going to jump to the top of wherever that trade is, and it's not going to be here anymore. And I will want to know what the hell this is. So, there we are. Continuing on, overnight high, overnight low. Previous value area high, value area low is 69. That's down here. Overnight low, that's what I'm looking for, is 66.8. Where did that go? That's right there. Typically, it's the POC, the mid, the overnight high low, and then the previous high low, and on and on and on. IB low is way off our chart. Previous value area high is 57.8. That would be right underneath of our POC. Now the POC has also moved up here, but because of the scale on the chart, we can't see it, right? I think if I wind it out far enough, we probably can. The previous POC would actually be here now. I mean, yeah, and now it's back up here again, so it's jumping all over the place. So that is 84.4 is here. It's now up here because it's dynamic, right? It's moving, as is the mid, and any value or statistic based on the overnight is still dynamic. Previous low is 51.4. That's way down here in the corn patch someplace. Way down here. 51.4. And this is also the IB low because yesterday we put in the low in the first, this price was put in within the first 1 hour because this is still the IB low and the low of the day. So we went down here, put this price in, and never looked back. That should tell you something. Okay, I'm going to leave the, wait a second, overnight high. Where did that go? That's 52.7. That's right up here. I guess that ought to end the previous high. 40.5. Now this should tell you something. I hope. What I was looking for. All right. How are we going to get to 52.7 if we don't come past 40.5? These are statistics. These are probabilities based on a look back of 2,000 days. Okay? So, these numbers are not hard, fast lines in the sand. They are probabilities. So you need to be sure you got that, your thinking cap screwed on when you think about that. Now we're going to do the TLab snap here, which is something I do every day for the Traders Lab. And it is a bookmap Discord chat room called the Traders Lab. And it is a it's started by a guy named Tom B. And it's free. You don't have to be even a subscriber to Bookmap if you don't want to be. And the key here, it's the only site I recommend. And, you know, Tom doesn't trade live. He doesn't call trades. And primarily it's a Discord area. He does stream an hour and a half or something in the middle of the day at one point. But so, you know, let your conscience be your guide. But it is, I feel that he's got good things to say, and that he is the, I would say, the real deal. He's been trading reportedly for 46 years. Good philosophies about risk management and things like that. Use trading as a statistical business rather than a, you know, gambling or a video game. So all of those things I agree with, and therefore it's the only site that I recommend that's public. Static I would heartily recommend, but it's a thing Rod has built and it's not public. So I'm fortunate enough to be able to be in there with a few people. When the stream is on, I don't spend any time at any of these other sites or Discord areas because I'm focused on what I'm doing. That's the point. Or it is to me anyway. So, now as I said, the minute we open, I will put this blue line on the new open, and that will be able to enable me to keep the context of the RTH session. Oh, look at these girls. Now we've opened high. Now we're going to be higher in range, right? Because our price is up here. Here's our close. We're within range. So if they open right here, right now, I'll need to change this label to higher in range and readjust the statistics. Hate that. The reason I'm fastidious about this is when I come back and look at a screen snap or the stream, this title, you know, this column title gives me a lot of information. I don't have to stop and figure out where the open was and all that kind of stuff, how it related to the open type. And I'll know that the statistics are based on that. So pretty quick here, we're going to open higher in range in another 6 minutes maybe. I'm going to leave it alone until we open, frankly, because I'm tired of doing that. I hate it when they get right on the cusp like that, and then they don't care about me, and they're busy trading it however they can to make some money. So that's the story, and I'm sticking to it. Yeah. That's irritating, but that's the way it goes. So remember the parameters for determining the open type. Where we open, if we open right here, right now, that's where price is. How does that compare to previous RTH close? There's the close. We're higher than the close, and we're within range. So if we get above here, we're out of range. We'd be higher out of range, which is incidentally and obviously a gap up. The open types, there's only 4. I think I went over that, but let's do it again. There are only 4 types of open. Higher out of range, gap up. Higher in range, lower in range, lower out of range, gap down, period. And they simply drive the statistics, determine, based on the open type. This is the number of the probability or the number of days where we revisited each one of these price levels within the days where we opened in this configuration, looking back in a 2,000-day data set. That's so important to get your head around and to, come to peace with the fact that this is a statistical business. Probabilities and statistics. That's, you hear the words edge, you hear the word expectancy, you hear all of those things in trading. That's what it's all about. So there you go. And we're going to open here now in about 3.5 minutes, at which time now we're down, here we're back to the close again. Suckers. I'm going to just stand by and complain. I'm going to bitch and moan. Don't see this one magical treat after the other. No trades yesterday. There was a structured one of my 2 IB trades, which I am vetting, fired yesterday, and I discretionarily did not take the signal. It would have been a scratch. And I did not do so because the context was up. And I always want to trade in the direction of context if I can. And that was a short off the top. That was an IB high failure. I can show you that, but not, I'll do that. Somebody remind me after we open. We're getting ready to open here now, so I don't want to be zooming all around. I, have screen a tab set up for all the back testing, so and I go through it several times in the day. So, welcome to the stream. Smack a thumbs up, subscribe, drop something in the chat. Hello. It's a lonely world out here, so it's nice to see some interaction. And your comments. Is this worthwhile? Is it a waste of time? Whatever. And remember that this is my virtual journal. So that is the ultimate point of it all from my side. Okay. Here we go in 30 seconds, boys and girls. Fingers crossed the volume profile resets. relatively close to on time. Jesus, that's been a nightmare. Boom, there's the reset, and we're about 10 seconds early, but I can live with that one. Okay, where did we open? Up here. So we opened higher out of range. You suckers. And notice that the overnight volume point of control fluffled back up here again. I will let IRT flag the open and tell me which is the exact column, but I'm believing that it is up here. We had a VPOC migration higher and back lower. We'll throw that flag over here just for fun. Here we go again. Here it is again. Wait a minute. Is that the RTA? Okay, you notice how the full session is a more muted yellow, and the the RTH session is the brighter POC. That's kind of probably something I should do about one of these days. This migrating POC flag is a holdover from the older workflow where I kept my timeline at 5 minutes. Because obviously as the day progressed, it would scroll off to the left of the screen and you wouldn't see it anymore. Well, there's our previous high, so that's over with. And now they're going to go up here and take out a new all-time high. Watch and see. And if you don't believe it, go back to the pre-market and listen. These guys have a real problem letting Asia or Europe hold levels. Or I don't know, problem or ego trip or whatever the hell it is. What I'm doing now on the IRT side of life is resetting all the charts to RTH session only so that the volume profile or the value area highs and lows are aligned in accordance with what people expect that are using all my price levels. Naked volume points of control. Boop. Shut those off. All right. This is the micros, by the way. I plot the same case for the micros. And push the session prices. So what did we think? I was thinking about some responsive buying. Let's see what they do. Mentioned that in the overnight or in the pre-market. Ooh, we've got a crazy Ivan going on over here. I don't know why I like that term. I think the only time I ever heard it was not from Red October. Don't ask me why it's stuck in my mind, but I think it's funny. I call these kind of goofy things in the POC. That's what I call them. No meaning whatsoever. Just nonsense. Okay. So what do we got going on here? Well, there's a big picture of what we're doing so far. Here's our open at 05 half. And here was our close. So we opened. Thank you so much, you little goofballs. Higher in range. Just the same as we did yesterday and the day before. Now I'll go back and change the statistics here best I can. As the morning unwraps, and the first thing I want to do is slap on Mr. Green Jeans over here. My top secret, very expensive indicator here. The secret sauce indicator. All right. Well, shoot. Okay, let's look at the statistics and start over here. Yes, I realize this is ridiculous, but it's not, and it's not for this reason. A, this is a recording that's permanent. Okay. 83.4 is the overnight volume point of control. That's 83.4. And you'll notice that these statistics don't vary a lot in close. The further away you get to the more extremes, they vary a lot. The overnight mid, for example, here was 83 point. Well, that was, never mind. That was the location of the mid before. 80 and the overnight mid is 76.8. Okay. This was the overnight mid. This is not anything here anymore. I'm going to just remove that one. What was that? Oh, that was the previous close. Previous close is 70.4. You see there? Okay. Previous high. Where'd that go? Overnight high 75.3. Look at the difference now. 52.7 to 75.3. And these are not, remember, these are not fixed. Oh, it's going to go there. Absolutely. They are probabilities or possibilities, I should say, I guess, probabilities. Probability-driven possibilities. There you go. 6.9. Previous high is 56.9 as opposed to 40. I hate it when they do this every time. What other statistics do I have in there that I'm missing now? I don't know. Well, that'll do for now, I guess. All right. Oops. Now the sneeze-a-thon is kicked in here. So let's see. I think we're pretty much what I don't want to have is some random value of probability over here that isn't applicable anymore because I had them set up, if you recall, for example, the overnight low. There's a good one. Overnight low is 49.8. You see here? The difference between lower in range and higher in range. I don't want some random crap in the, and here's our IB high. Now you see the benefit of marking the IB high and putting that down there? Here's where the IB high is. Way up there. Now. And I don't know what, that was previous low, I suppose. I'd like to say something here that, yes, I could automate this stuff. The IB high is now 68.6, the previous one. So not too different, huh? I could automate these and push them as I do the session prices, I guess, probably. But I don't want to, I like to put them in manually, then I have it connects with me. If it's just pushed over here, okay, it's snazzy and it looks real groovy, but I may forget the damn thing completely. Know what I mean? That 69% was the previous value area low. That's 54.6. There's something goofy going on with this. This thing jumps back and forth, and I have no flipping reason why. I don't understand why that happens with that one particular value, but I've noticed it before. And they don't change, that previous value area low is the value area low. Yeah. I'll tell you something about that in a minute. I'll tell you a secret in a minute. 54.6. The reason that can change is to do with the charting. We'll see if this moves again. The value area low and high, okay, I'll just get it over with, I guess. The value area low and high reflect in IRT world, in session price world, or session statistics world of IRT. The value area high and low represent the previous auction. The developing value area high and low represent the current auction. So, all night, the value area high, the value area low are accurately representing or, marking yesterday's RTH value area high and low because it's the previous auction. The minute we open today, RTH today, suddenly the previous auction becomes the just closed or just ended ETH session. That's why I changed the charting right after the open from full session to day session only to adjust the value area high and low to the expected value. Now, for me, doesn't matter. I know what's going on, but I push these levels and share them, freely and openly with anybody that wants them, and have for a long time. And they expect this to be the previous RTH session. So I just got used to it. Okay. And that's where we are at this point. What's next? Well, we have Blue Boy on duty. That's good. We're at $1 high. That's also good. And what are we doing? Well, we had a little bit of a poke up, and now we're selling down. So there you are. If you want to see just how the fact, what do you call this? Okay, there's day before yesterday. B-shaped profile, long liquidation. Yesterday, P-shaped profile, short covering. If you don't believe me, look over here. Open, close. Open, close. What are they doing? They're trading the hell out of them. They're just slopping them. You know, this is retail soup, man. They know that a bunch of retail traders cannot resist clicking that mouse and that they're going to make money. And that's how they make money. That's how the other time frame makes money. There you go. Oh, you know what I forgot to do? Duh, football. Man, I got completely discombobulated here, I'll tell you. I completely did not set the, you notice that Bookmap can't trade. And how dumb is that? I knew I was forgetting something, and I was busy looking over at the damn open type. Oh, that was stupid. But here we go. In order to trade with Bookmap, you need to activate the trade control panel by clicking that padlock. Then you need to select a method you will use to trade with your mouse within the Bookmap app. Chart means you can trade with your mouse only in the active data column. Dome, you can trade with your mouse only in the dome columns. And both is, as you expected, both. The next thing I do, which is important for me, is the multi-brackets. Now, this is where the risk-neutral methodology enters the picture automatically. This is the smallest risk-neutral package you can use because it needs to be an even number. That's the package, 2 contracts. Then you determine a stop for the entire package. In this case, it's 12 ticks because the first thing you need to assess is your account risk parameters, and then your, the instrument you're trading, the volatility, all those things figure into it. But the most important one is your account risk requirements or restrictions, or however you want to say it. Once you have this first package size and stop, or R1, R, your risk determined, the first risk neutral scale, or T1, is automatic because it's for the same number of ticks positively as your stop is negative, and it is for half of the package. So this is R1. And this is R, plus 1 or plus R, and this is negative R. And then you can do, in this case, my runner is then R12, because this is 48 ticks or 4 points. I think so. Yeah, and it's for the balance of the thing. You can do 4 contracts. You can do 4 contracts in high volatility. And these are just, you set them up yourself. You build a new one every time you want one. That's all there is to it. These are ones that I had built in the past back in April when Einstein was was rolling out tariffs and the market was going upside down, This is the basic risk neutral package, and this is what I'm using to vet these trades. Next thing I do is the multi-account trading, which is here, and that is, I will explain to you what. So now, let me continue first. See the parameters up here in the metrics. I have them set to ticks, by the way, and not dollars. They are the same as are here. I don't need any of the other functionality of the risk trade control panel because I use multi-brackets. So I'm able to confirm the package size, make sure I'm going to trade with the dome and the chart with my mouse. And then I can click this button again, which stays green. The padlock stays unlocked because we've selected a way to trade. I get the real estate back. I have all the same in trade and daily parameters here. And I have cancel all and close all. I'm all set to go. That would have been pretty embarrassing, huh? Get all fired up for a trade and then be clicking the hell out of things and nothing happened. One thing about trading here with the mouse, etc., you can also set up your keyboard to hotkey, which I've done. In fact, I used to trade that way exclusively for a long time. But I realized with Bookmap, There's two things you need to know. First of all, after you've set up your hotkeys, the computer focus must be on the bookmap application in order for your hotkeys to work. And that's just standard in any computer, in any operating system. You know, if you've got the computer focus over on IRT, how the hell is it going to know to put an order on bookmap? It isn't. So that's normal. Next of all, to do with trading with the mouse, and the reason I've, struggled to get up to speed with it, I believe it's much more accurate and faster with bookmap to trade with your mouse. If I want to put a trade exactly 69, bang. And depending on whether it's right click or left click or something else, you can do different orders, And you can learn all of that in the bookmap, what do you call it, facts or something like that, or handbook or something. You go to help, you go to bookmap portal, and that takes you over to all of their stuff, information wise. So now let me see that I'm babbling along here. I was clever enough to remember to be able to trade. One thing you need to be really careful about is this active data column here. For the longest time, as I was converting to the mouse, I only used the DOM columns because more than once I accidentally was trying to point something out or was trying to move a stop move a target. I never move a stop away from entry. By the way, that's a cardinal sin. And if you accidentally click over here, you notice how the mouse pointer turns to a $sign. Here it's an arrow, there it's a $sign. If I click over here right now, I'm in a long, whether I wanted to be or not. So, let your conscience be your guide on that one, but keep your head screwed on if you're going to use the active data column and the DOM. I find it even more convenient and quicker on the active data column because if I want to put, if I want a resting short right here, I can right click that and put that right on that number and not have to fuss around over here and whatever else. And, be sure you figure out, figure out the correct mouse clicks. I think there's I hate to sound stupid, but I think you can use a shift, right click, or left click for different things like a resting order. If you want to do a market, if I want to do a market short, I just click anywhere below the market over here with a left click and boom, I'm short. If you want to do a resting order, then you got to do something else. And it's the other way around for a while. Now that I've said that, I'm standing here wondering if I really remember myself. I need to review that. So welcome to the stream. Smack a thumbs up and how do you do and something else. Now let me just tell you something about my trading at this moment. I am vetting I'm approaching trading as a statistically or probability-driven, sustainable, consistently profitable business. Not a video game, not gambling. And in so doing, I'll talk about all of the ins and outs of that in a little bit here, but it's not an adrenaline rush. It's not clicking the mouse every time you turn around. It's trading only vetted setups. And being that the reason that I'm now able to keep Blue Boy over here and keep the entire session in range for context is because I am only anticipating certain setups to trade, and when those setups start to become valid, then I can zoom in. But I don't need to be, If I'm waiting for the IB trades to set up, and the IB is that we all know is going to not even set until 9:30, what do I need to be looking like this for? Tell me where the POC used to be. Tell me what the context is so far in the session, without looking at my, don't cheat and look at the volume profile. I like this way. You can do whatever the hell you want, but that's why you can get so zoomed in with Bookmap, you're into microseconds, and I think that's dangerous. It is, sure as hell is for me. Well, they keep hammering them lower, don't they? I didn't even have the IB. There's the IB low, the value area low. We're coming through. We're headed for a low volume node down here from yesterday or from sometime. What else is going on? Well, let's look over. Ooh, I have the right there. Let's look over here. This is the micro composite chart again. Daily session, RTH session, and daily candlesticks. Wherever price overlaps, volume profile. That volume profile then dictates the high and the low volume nodes, which are pushed over to Bookmap. There's day before yesterday. There's yesterday. Here we are today. Here's the micro composite VPOC. Here's the there's the POC from yesterday, which we've now taken out, and here's the POC from today, and these are naked volume points that we control below us. Why are they all below us? Because we're at all-time highs. Just, how it goes. This is the market profile. Now, I have context right here. Here's yesterday. We're on the RTH session. Here's yesterday's trade. Here's today. Which way do you suppose the market is going? What is context so far? If that's not about as down as you're going to get, I don't know, right? I don't want to trade counter trend. Or I don't want to be, as Tom refers to it, if you're coming in here from the TLab, part of the retreating army, That's a cute reference. But there's the context for the day. Could you have taken a short? Yeah. But that's not that's not what I'm doing for my business. And my business now is to vet and focus on the IB high trades, of which there are two. I'm not IB high, the initial balance trades, of which there are two. And what are those two? Well, first of all, we know by definition that the IB statistic is not even remotely a thing until 9:30, because that's the definition of the initial balance statistic. The high continues to go up with price. The low continues to go down with price for the first 1 hour. At 9:30 Central Standard Time, right down here in the bottom right, they will stop moving. And at that point, the IB statistic is active. The IB statistic is a well-known, I'm sorry, I'm reading my something over here on my left, on my timeline. The IB statistic is a very well-known data point that's been around since Christ was a carpenter, I think, and to do with market profile. And it's a pretty significant statistic. So let's look. Here is the homework chart, or the statistics calculations. We've already looked at that when we put the statistics levels, and you see we've confirmed we're higher in range instead of lower as I thought, and here are the statistics. Something that's interesting if you have IRT, whether you noticed it or not. You see how some of these are blue and some of these are still black? If they've already been hit or revisited, then they changed to highlighted to blue. Anyway, these are the prices. We look back over 2,000 days. Of the 2,000 days, We opened higher in range, 608 of them. Of the 608 days where we opened higher in range, the overnight volume point of control was revisited 83 times, blah, 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 all the way to the bottom. Now, here's the IB statistic. There is a greater than 97.9% probability in all 4 open types that the IB high or low will be revisited by price at some point in the balance of this RTH trading session. What in the hell does that mean? Well, after 9:30, there's a greater than 97.9% probability that this level or this level will be exceeded by price at some point in the balance of the RTH trading session. In other words, from 9:30 until 1600, somewhere in there, one of these two will be exceeded. Okay. Now, once that IB statistic has been, hey, Panda, what are you doing? Has been satisfied or met or, achieved, however you want to put it, that activates 2 possible trades which I am vetting. One is the IB failure, which is essentially a fancy word for a mean reversion setup based on the initial balance. In other words, price comes down, takes out the IB, comes back, can't get any lower, reverts back to the mean. So it's outside in, or it's outside in, depending on mean reversion. The other trade is, as you can probably guess, the IB continuation trade. Well, we're rocking and we're going somewhere in a hurry, so we're going to come through there, we're going to come back and keep going. Simple. Those 2 trades are suggested by price action up from the open until the IB statistic is active, and that they are as follows. If we're in a directional kind of a day, this is pretty much directional, right? This is definitely not balanced or rotational. That would suggest an IB continuation trade. Suggest. You anticipate that. You trade what you see. You do not trade what you think. Big, big thing to take on board. You really need to do that. Trading is statistics and probabilities. It is not, I'm right, I'm, any of that crap. And the other trade, as the IB failure, is when we're in a balanced or rotational day. Now, interestingly enough, the percentage of trading days in a year rotational days are much higher probability than directional. Just FYI. So there's that. And let me see what this little kitty wants. I'm pretty sure she's starving to death. What, Bella? Yeah, you need a snack. Okay, so, having said all of that, I hope to hell I have all of this. Something that I probably didn't go over, and I probably should, when I was setting up my trading facility on Bookmap. The multi-account, I always glaze over it because I set it, I confirm that it's set when I enable the risk-neutral trading multi-brackets. And then I want to continue talking about something, so I get back to it. The multi-account trading is real simple. This is a top step evaluation account. And any trade or anything I do here pushes to 4 others. So I'm essentially trading 5 accounts here. And that multi-account thing just replicates whatever I do on this account. And the totals up here only represent this account. You know, lots and profit or loss or whatever else. My idea was when I started this was to do 0 to hero, right? And have a completely, absolutely transparent and fully accountable record of that journey, because that would have been a big help to me way back when. And I would hope that the stream makes sense and is helpful to anybody else. That's the point. That's why one of the reasons I stream live, which I already talked about. Streaming to YouTube has 2 benefits for me. First, I can review it on any device, which is pretty handy because I use only stand-up desks here. And I'm standing here from about a little before 6 in the morning till usually around 2200 at night. So, you know, to be able to review, and this stream is 7 hours long every day, minimum. Well, I'm sure as hell not going to listen to all 7 hours. That's why the timestamps and the chapter markers are so important to me. And also, it's nice to be able to review it on another device. In addition to that, it provides another layer of accountability and transparency. I stream the entire monitor, you'll notice, so you can see any program I have open. You can see the clock, hours, minutes, seconds, the date, and they tie up to Bookmap and IRT. It's nice to have people watching and joining and contributing and subscribing and stuff like that. But this is my virtual journal, so stop and think about it. The only way that I get what I'm thinking into the recording is by this voiceover. And the next thing to think about is, why would I want to bullshit myself? Stupid as that, I mean, I guess there are people who would want to do that, but wow, I can't imagine. I am developing, hopefully, my goal is to develop and maintain a consistently profitable trading business. So, there you go. And I think I have my stuff all screwed up here as far as my timeline goes. I had a real nice plugin that did the chapters that I just hit with a hotkey or enter on the fly if I needed to. But unfortunately, when OBS updated to 32.0.1, a whole bunch of plugins didn't work anymore. And my chapter marker is one of them. And I'm really hoping this young fella in UK who built it gets around to updating it, because it's a huge. Now I'm trying to maintain it myself on a text. What do you call it? A text dock over on my left. I have my setup here is 2 stand-up desks in an L. In front of me is a 4-monitor rack with my trading screens on the bottom. These are 32-inch 4Ks. Then to my left is another one on this machine, which is a 27 high def vertical, and that's where I have OBS and stuff. The top 2 monitors on this rack are powered by another computer, and I monitor the stream up there and whatever else. And then a little further around the corner on the other stand up there is another 32 4K, which is being pushed or run by my old workstation for, Outlook and all that stuff. Life apart from trading. So I hope to hell I've got these chapters up to date here. That's going to really irritate me if I have them wrong. Oh, we got the open. Well, they can't miss that too much. This is after the open. I can't believe I missed the damn setting up the 2-lot package. That's pretty crazy, huh? I think that was about 5 minutes after the open or something. I'll have to really address that when I get around. These chapter markers, incidentally, just FYI, are only put into the stream when YouTube processes the stream finally after the stream is over. After I've stopped streaming, then YouTube starts to process it permanently, and that's when I can enter the chapter markers and the stuff into the timeline markers, or whatever you call them, into the description. And maybe there's some other way, I don't know. If you know, let me know. It's a giant pain in the ass. I'm so sorry I updated OBS. I can't even see straight. Typically, I never do that when it says, an update is available. I typically never do that until I've researched it a little bit. And that Sunday night, a week ago Sunday night, I was just weak, I guess, and clicked OK. Boy, was I sorry I did that. And there's no other benefit to me. I'm sure to other people there's a lot of benefits to it. But for me, the one thing that I relied on heavily is broken, and the other stuff that I use was pretty much functionality, built-in functionality. Okay, so we're 9 minutes. We're at 9:10. We've got 20 minutes to go for the IB. There's the low and there's the high. Looks like we're kind of directional here, or out of balance, let's put it that way. I can't really flag this. I guess I kind of can. This world without news impetus and the ever-present heightened possibility of political critical risk, unidentified, unexpected political risk is nerve-wracking. Let's look at what the hell is going on, having said that. So here we go. What's the news up to? Oh, I'm almost afraid to watch. This was, again, this is IRT free. Filter how you want. This is next week, or this week. What I was pointing out here earlier was that they've got non-farm payroll back on the schedule. I don't think that's going to happen, but we'll see. And this is financial juice, which is, here we got, after the peace deal was done. There's no peace deal isn't done, you dunce. Well, this guy, they take every moment to milk this stuff as much as they can, don't they? I guess that's why they're back there and I'm not. Money talks and bullshit walks, eh? Now, this is going to be a potential market risk here, the cabinet meeting. And then again, down here at 1400. Primarily because, not political statement at all, but we don't know what may or may not be said. That's a risk, You don't know what impact that, if anything is said or if nothing is said, will that have an impact on our auction? And that's what we're here to figure out. That's why, we know that the first Friday of every month at 7:30 in the morning, except last week, we're going to get the non-farm payrolls. That's coming. And you can adjust your risk mitigation plan accordingly. When you don't know if there's something coming or what that impact of that may be, That's an unidentified potentially critical risk. So it's something to pay attention to. You know, it's a business. Let's look at this like a business. I think it's important. We got about 15 minutes here. I'll take this opportunity to try to get my freaking time thing up to date. Let's look at the backtesting tab here and kind of go over that briefly now. Okay, where to start? This is my backtesting environment. This is the backtesting system which I've built to backtest the initial balance trades, of which there are 4. You know the 2 trades, there's a continuation and the failure, all right? There is a possibility for one of those at the IB high, and there's a possibility for each of those at the IB low in any day. The way backtesting works, unlike the micro multi-brackets, you have to, this is an IRT, you have to set up and create a rule for each and every step, long and short. There is absolutely no discretion involved in the backtesting. It runs through each one of these rules, each candle, each 1-minute candle, looking back as far as you want to go. This chart over here is just a tool for me to visually verify that the rules are doing what I think they're doing. And these rules, these levels here are custom indicators that I built for this chart. And these signal markers are the same. They're just custom indicators or custom signal markers that I put on this chart. And they are based on exactly the rules in the trading system, but they're not connected. In other words, when something happens over here, nothing's going on over here. If I want to review after the day's over what the trading system actually would do on this chart, I can send to the chart, and then it will go back since, you know, all time in the data, and it will plot each and every one of these IB high, IB continuation, IB failure from either the high or the low, based on these rules, which are sequential. Yesterday, you notice today, we don't have any lines or any rules. What's going on? Well, it's because it's not 9:30 yet. At 9:30, we will start to get these continuation zones, the pullback zone, and the trigger zones. Strictly for my confirmation, and then these signal markers also. For example, and let me point out that this is probably a little confusing because I don't bother ensuring that the signal markers are sequential. I know they need to be, so this is for me to look at, right? Okay. Green is longs, reds are shorts, pretty obvious. Here's the IB. It's 9:30. We take the initial balance statistic. There's a potential short, there's a potential long. They're the same thing because it's the initial balance statistic. Now what am I waiting for? I'm waiting for a B signal, which is the second signal, and then I'm waiting for a trigger. This would signal entry for a short. I did not take that yesterday because I didn't want to trade counter contract and counter trend or counter context for the day. This is a short off the high. We're strongly up all day, and I used my discretion in the real market here to not, I just keep an eye on these signals for to verify if what I'm going to do on Bookmap. Now, I used my discretion not to take this trade, and it turns out it was a scratch, no problems. But you know, the short was right there. The scratch was right here, and the stop was over here. There you go. Now we'll be looking at today, and here's some more signals. But you notice these would all be B signals for the continuation trade, but there's no trigger, no trade. Nobody said this was gunslinging or exciting. So there you go. Now I'm going to widen this out a little bit and keep an eye on today and see how it works. This is a kind of a visual, or I guess visual real-time analysis of the system. I do backtesting also, and that's a different story, which we'll talk about later. Okay, baby girls, we've got 9.5 minutes left. What did we do here? Ooh, everybody got excited. Somebody said something over there. This is a bad day. I don't like to have all this craziness and nothing on the docket. That's, you know, that is not a good environment to be in my opinion. Oh, man. Okay, where are we now? We've got 5 minutes or 6 minutes till the IB statistic is set. And then we can our spidey senses will be tingling. We can then zoom in if we anticipate a trade. And let's see what happens. 10 o'clock. Those cabinet meetings have been pretty serious. Okie dokie, 2.5 minutes. Ah. So, got about 1.5 minutes here for the IB statistic to be set. I think I went over that in enough detail. And now you can start to, or I will start to, sit up and take notice here and start to expect, anticipate the probability or the possibility of a trade. Remember now. Oh, we did we just take the IB statistic? Sure as hell did. Look at there. Exactly at 9:30. The statistic went active and we took it. Okay. So what has that done over here? That's triggered the IB stat on the lower configuration, right? That's pretty funny. Well, I was going to say do not trade to the statistic, but I'm not going to bother with that now because it's over with. So now we have to zoom in and decide that anticipate what may happen here. And
hey, the IB low is taken.
Well, we've had a B signal now so far also. Wow, this is unfolding pretty quick here. What I'm talking about is over here. Let's see. So here's A, there's B. Now, it's just started drawing these lines because they start exactly at 9:30. My reasoning for that was to, if I saw a signal, over here somewhere, I go, well, wait a minute, that isn't right. Remember, this is for me to confirm what the hell is going on. So we have an A, we have a B. Now what we need to look for is the trigger, which would be price to pull back to within 1 point either side of the IB low. That would signal or trigger an IB continuation trade to the downside. They don't usually unfold that quickly, but that's how it works. And what I'm doing now is waiting for these signals to unfold. And if they do, boom, we'll enter the trade. That's the way to do it. I mean, that's the way I'm approaching this, is to be as what is that doing that? Okay, what is this? I don't want to do that. Okay. Always leave, never update. Okay. I don't know why that's doing that, but okay. Now what I want to do here is keep my eyes open for the trigger. And I thought I had something pretty cleverly figured out to push here to bookmap, but I don't. Oh, here it is. Here's the uppers. There's a continuation on the highs. I don't see my levels to continue on the low down here. Oh, because I only put them in there for the high side last night. I was experimenting with pushing these lines and levels from my trading backtesting rig over there to bookmap, and that's what these are. And I'm looking down here going, where is it? Where is it? Where is it? And I remember that last night I thought it was late, and I thought, okay, I'm going to push these 4, and then here's the 2 upper ones, the continuations. There's the IB, and here's the 2 lower ones from the top. And I didn't put them on from the bottom, but it works. So that's encouraging. I can do that later. I never do anything homework-wise, change to trade plan-wise during the trading session. Those are all things you need to do when you're cool, calm, and collected. Yeah, so our trading signals are firing out pretty quick. Now what I need to do, of course, is to get this frickin' thing so I can, these monitors, I've got to try something with these monitors. I don't know if anybody in here is using big monitors on a rack like I have these. Obviously, the large curved monitors are for a reason. It brings the visual geometry to your eye from on the outer edges. It changes the geometry, right? And these flat ones, they just goes off into oblivion. I'm thinking about pulling the outside corners in, so I more or less reproduce a curved monitor geometry, kind of, because I have a hard time seeing these damn things. And my eyes are toast. I'm an old guy. No, they're okay, but they get tired. So let's get over here and have a quick look at this. Now, here now are the continuation zones, the pullback zones. There's A, there's B, and this is the trigger zone, which is 1 point either side of the IB low. We did not reach it. Had we reached this here, that was an IB trigger. That was a trigger short. So there we are. Well, that's pretty encouraging. I'm going to change those. I'll add those reference lines to the IB low later today. And there's so assuming we were trading up here, there would be the continuation zone, boom, boom, and the pullback zone, boom, boom. Now the trigger zone, I can pretty much figure out where 1 point is either side of the IB, right? That's not outer space, and here's the IB. For me to estimate where 3 to 5 points is not very easy.
Hey, the IB low is taken.
I'm trying to think of the best way to get this zoomed in to my view here. I guess that's pretty okay. The thing that I have to be careful of with IB is that if I monkey around and this progress line turns gray, it's not automatically progressing or updating. And I am forever doing that during the day. Cool. Well, here we go. These are just, this is a quote page with the V-pound variables and their titles, testing the backtest. I wanted to make sure that the values are being captured properly. It's got nothing to do with what we're doing now. All right, this is fun. It's real refreshing to have figured this out this far. You know what I mean? I tell you, it's pretty daunting in the beginning. Trying to this chart here evolved originally by me trying to scroll back and look at or capture data visually by just scrolling back through the charts to see where these various trades would have occurred and try to capture the statistical data that's required to vet the trade. And first I started just scrolling back. Rod and some of those guys apparently can do that. And I couldn't figure it. I mean, I couldn't keep track of it. So I built these indicators which give me visual reference as to did it really happen or didn't it really happen. And I've found when they vet stuff or when other people do that oftentimes discretion sneaks in there. Well, didn't quite get into the zone or didn't quite get up to this pullback, but I took it anyway, like right here. Yeah, I didn't quite get to the trigger, but I took that short. Well, that's not part of the rules. I'm trying to eliminate as much of that discretion as possible in the heat of the moment. Did I potentially miss this trade? Maybe. So here's our IB statistic taken. We trade back up to the IB and can't get through it. That could be considered a trigger, and in fact used to be a trigger in my old just IB when I was first starting to try to figure out how to code up this backtesting stuff. The suggestion of doing it in a sequential flow was based on a suggestion and rules by Rod. He said, "Here, try this out. This is what I use for the IB failure." And it made real good sense to me, and I took it as an opportunity. Once you code up one thing, right, well, you can switch it around to whatever you want. If I want to trade a sequential set of rules around the IB high or low, okay, I have that already. What if let's say I want to do it around the IB or the VWAP? Easy. All you do is change that original setup trigger, and then the rest of it you can do easily because you've got the rules, you've got the trade management, you've got all of those things in place already. And that's a big deal for me. Let's get back over to the heat of the matter here so I don't start babbling on, like in the biblical sense of Babylon. I want to be sure if we get the trigger, which we missed right there. Now, let's assume that, no, I'm not going to assume that. That's bullshit. I am rule-based and I have patience and I am a disciplined trader or person. So that's all there is to it. This is not an adrenaline rush or or gambling or a video game or any of that stuff. It is, my intention here is, it is my business. Oh, I can add these V pound variables over here for the signals or for these highs and lows. I think I've already got them. Yeah, I already have them here already. Okay. I got to change the color though because it's make them something I can see. Well, that's pretty darn disappointing, isn't it? But that's the joy of trading. It's not a trade. It isn't a triggered trade because it's not a triggered trade. Is it going the right direction? Yeah. That's where traders get so balled up, in my opinion. And I'll say this, I need to put this in there down into the time thing because this is important, I believe. And I'll put it right over here now. What are we? We're at 01:45. It's a huge issue, but it is part of our monkey mind deal. When an error works out, humans, this is just, okay, I'm not a psych. I'm an old cowboy from Montana, all right? And that's the truth. I am not any shrink or any of that BS, but I do have some miles on me. So, back to the market. Am I disappointed that this didn't trigger the short and I'm not in a short now? Yes, absolutely. But here's what I was getting ready to talk about. If I had disregarded the trigger and taken a short I think so, throw the dart, and I'm winning big time now, that's one of the biggest problems to your trading, to my trading. And it's a human, very, very strong human tendency to only remember the good things. You know, if you move your stop away from your entry and it works out one time in your favor, you'll remember that till the cows come home, and you won't remember the thousands of dollars you got it, shoved up your backside because you did that, and it went on to take your stop for a lot bigger stop loss or R factor than you had originally planned. That is human nature. Had I taken this trade, though it was not triggered and it went down here, I'd remember that. And I think, oh, well, okay, maybe I need to tweak these. Okay, maybe I do. But I don't do that now in the live market. I do that as a back test. And now that I have this all coded up, I can do all the what if stuff. What if my trigger zone is 1.5 or 2 points from the IB? What if I have instead of a 3-point stop and a 3-point risk neutral scale, what if I have a 4-point? I can do all of that very simply back testing. But this is not the time you do that. It's human nature. It's like our ability to, we were able to survive and evolve because we could spot patterns, we could see the tiger or we could see the whatever. But humans have gotten to a point where if there isn't a pattern, we'll just make one up and think because it feeds our innate wiring to be right. Real dangerous. Supposedly, if women remembered the pain of childbirth, the human race would have died out after the first one, maybe first generation. Apparently, I know, obviously I haven't been there or done that, but it makes sense to me. And in this case, it applies, right? Throw something in the chat, say hello, thumbs up, subscribe. That's great. This is my journal, remember, and this is not for trade or financial advice, it is me being completely transparent and open with what I do in hopes that it is my trading journal, so it has that benefit for me. And hopefully it will have some benefit, either, oh, that's a good idea, or holy shit, I never want to do that, to you. Whichever. I don't mind. If you think what I'm doing is completely crazy and you want to do something else, that's good. Then good for you. Hey, Richard. Morning. That's good for you. Okay. Or I should say good afternoon, sorry. 24 over here this morning. Kind of nice. Ooh, look at us go. Now, what is happening here now? We're approaching the target or the trigger zone. We missed it right here. We have our A signal, our B signal, and we missed a trigger. So we're floating along here now, and we may get up to our trigger zone. I will take it mechanically, whether I really think that's a great idea or not, but I have to do that. Ooh, baby. Within a tick, huh? It says it's fired. Did it? It says so. yeah, it says it fired.
Order submitted.
Well, we'll put a resting order over here, a resting short. If it gets triggered, let's hopefully we see all the follow-on boys going along there. And it didn't get triggered yet. That's pretty disappointing, isn't it? Wow. There we go.
Order
1,
submitted.
2, 3, 4, 5. Okay, so
Order submitted.
they're in the
Order
book.
submitted. Order submitted.
There's our stop.
Order submitted.
There's our T1. There's our T2. Will we get stopped? Who the hell knows? But I'm following the rules as they are working. Now the next thing I have to do here, excuse me here, is make damn sure
Order submitted.
I want to see the trade statistics for this damn thing. I don't know how you get the thing open. Open the panel, okay. Okay, there we go. The other day I got hosed here. So here we go. Let's see what happens. Okay, great. The other day it did not. I moved the stop up to break even. It came back and took the stop, and I was only able in it, but it only affected 3 of the 5 accounts. So, oops. I want to be real careful about that and monitor it closely. Here's our open. Oh, I know what I got to do. I got to put in the T1 gizmo over here at whatever time it is. 150. Now, if we go down and get the scale, I'll be happy. Well, I'm not liking the fact that they're not getting going here. And based on the entry, the stop is in an inopportune place. However, I guess I should have, this is something I need to think about after hours here, is that when I get the trigger, put it at exactly at the IB, you know? That's important. Okay. I don't like the time of day and the fact that the this cabinet bullshit is going to start in 5 minutes either. That's not conducive to a successful trade. So the time factor could be working against me here, but at least all things are as they would be. And there's a stop. Let's see, did we get them all? Okay, we got all 5 stops right there. So that's good. That's all done. And it worked properly. So now we have 1Trade, negative 24 ticks P&L. That's correct. On this first one. Then that's been pushed to 5 others. So that part's all correct. Okay, great. No, I mean, not great stop, but hey, it's 50-50. What can I say? And like I said a minute ago, let me take a screen snap. Well, I'll get a screen snap of that in a minute. The position here is not good because of this consolidation and the fact that this cabinet meeting's coming up. So, but I took the trigger as it occurred, and that's what you have to do, in my opinion. Of course, now there'll be, it's possible that we'll get a continuation trade, and I'll have to really think this one over. Where am I now? Okay. I want to get this screen snap, but not have it all. Okay. Oops. I don't want to do that. I'm taking screen snaps of my book map side over here, and I didn't want to be interrupting the stream, and that didn't work out like I had planned. Well, shit happened, right? Okay. Oh, I know something else I need to do. There's just so many little nit-nat things I do because I'm goofy. All right, here's another. Here's the snap that I take each and every. Ooh, no, wait a minute. All right, so there's the snap I grab at the end of the trade, which has the stats across the bottom and everything over there, and this all goes into the journal. The urinal. Wait a second now. Okay, here's something important to watch. This is an IB trigger failure, but we did not have a B signal yet. Now we do. A, B, assuming that it stays, and then we would need a trigger. Now the B's gone away because the criteria has been missed, right? Now I have to really scratch my head and think, do I want to take an IB failure trade here? My initial thinking is as follows. No. We are going into this, there's a political news risk right now. We do have the trigger, right? I mean, we don't have the trigger. We've got the A and we got the B. We don't have the trigger. But here's my problem. The range requirement. I want to see 3 points to my risk neutral scale unobstructed. And remember that the mission of our job here is not to just take scratches. It's to take the profit target. So if you're going to get along right here on an IB failure, first you got to get down here for the trigger, which isn't happening. And then do I think there's the probability of reaching the scale and then profit target? So let's assume that I get long here at 81. That means I've got to get to 93 to have my T2. That's all the way across this nonsense to get up there. That would not be a very high, I wouldn't consider that an A+ trade. That's discretion coming in again. And that's how my thinking goes in the day. I don't know what else to say. What am I looking at here now? So here is here's my rule. Okay, so now what do we got going on? Here is a trigger for the long. Right there. And I missed that. Talking over here and looking at my other screens. Again, do I think that it's a viable idea that we're going to get an IB failure from down here up to the T1 and then the T2? That I don't know. My initial feeling is that with the risk, the political risk that's on right now, with those guys, all of them in the room, looking at the cameras and the microphones, I don't think that's a good idea. Am I sorry that this didn't take another 2 ticks and take out the scale? Yup. All right, so here we go. There's the trade of there's T1, IB continuation trade short. There's the first rule, second rule, and the trigger. And I don't feel bad about that trade at all because the outcome of the next trade is 50-50. That is something we really have to come to peace with. got a whole lot of triggers and stuff going on down here. No, I only had one actually. Now, let's get back over here and think about this. If I took this trigger spot on when it fired, that's at the IB. That's at 81. And we're up to 85. So that would be scaled. You know? And I guess I would have felt like I was a pretty clever boy. Looking at it here, I don't see that. Well, there's 8175, so there would have been the trigger. And there's a scale. As you can maybe tell, I'm a little apprehensive to just, go get after clicking this like I'm killing snakes, because it's much better to run the back test without any real count risk and see the numbers. But I've done it enough times now that I'm going to continue to trade these two setups based on those rules. And away from the live trading session, I can tweak those rules and see how I can optimize that. And then do a walk forward, which IRT will do all of that. And at this point, with the boys in the entire critical risk band taking the stage back there in the cabinet room, I think I'm going to just be patient. I'm pretty glad that stuff's working. I got the lines pushing across to the my pullback zone and continuation zones pushed to bookmap. Richard, that worked out pretty good. I only did the upper ones last night, and there they are. There's a pullback zone lower, and then the uppers are up above us. Up here. I'll do the IB low this afternoon or this evening. So we get back to 1 point high, and where's Blue Boy? Come on, there he is. Okay, that's our session. This is where the risk. This is where the band took the stage right there. So I'm going to stand down until that's over with. The hell's going on? This is supposed to be showing and hiding this stupid thing over here. Why not? Huh. Okay. That's goddamn irritating. I'll be right there. Boss is calling. That's important. All of these B triggers that are going on over here, I am not, too close to the POC. And we've got the random risk band on the stage back there. So now I'm trying to figure out why this goddamn thing isn't working. What I did wrong here, I don't know, but I have a way to do that. Watch this. Add an info button. Boom. Now what I want to do is edit the button. I don't want to add or remove. What I want to do is show or hide. Show or hide the indicator. Boom. Apply. Boom. Boom. And here we go. There we go. See how easy that works? Oh, sorry. I had to redo this button here. Well, I think it's safe to do something. I don't know what. Pretty happy about these lines, so I will be able to, I don't have triggers, and I don't think I'll put them on here, but at least I'm passing these lines, and I could also add them to the session prices if I wanted to. So there would be a flag like there is here. Of course, I only did the upper ones on the IB high last night. God, I can't get the right monitor going. Here we go. My R factor is about 2.5 or 2.25 to 1, so that's good. Yeah, I'm pretty happy about that. That's, I don't know how I came up with that, but I did. So let's look at this trade and just kind of review it. IB statistic, back up, and that's a valid trigger for the IB continuation trade, which I took. It didn't work out because the outcome of the next trade is always 50-50. Whether you want to believe that or not, you need to come to peace with it. That's the fact, Jack. Disappointingly didn't get to scale, and the target was not out of, was not something ridiculous because it's just below the RTH low currently and above the previous low and some other points below us. Remember, this is the POC from yesterday. So there you are. I don't feel bad about that trade at all. I played by my rules. And that's where I probably fell down, but doesn't matter. It's a moot point. Something that I'm going to need to consider is, here was my entry. Should I have had a resting order at the IB to come back up and touch it, or within the 1 point? In the trigger zone, there's 80.75, and my order was 79 quarter. So another half point, maybe keep those orders with those entry levels within the target zone. That's something that I will need to figure out in the backtest world. Now, on the other side of the coin, and you see how this damn thing has stopped updating? It's gray and it's not updating. God, I hate that. And in a minute, this will go zoop. There you go, see? Hate that. Not sure exactly what to do about it either, to be honest with you. Now we're working, now we're okay. So, okay, let's pretend the other side of the coin. Now, we have our A, there's our first rule. We have our B, second rule. Here's a trigger, but no B on the failure trade. Here's a B, there's a trigger. You got long right here. You wouldn't be stopped out. You would have been scaled. But as I tried to discuss earlier, I have this range requirement. Tom refers to it as meat on the bone. That's a good way to look at it. My range requirement says basically that an entry, even though this is completely a valid entry with all three triggers, it's not valid if, or the entry is invalid if they're, God damn, I wish I would stop doing that. I got to figure out how the hell to do that. What's happening is when I click my arrow keys to move monitors, it's throwing that one off. Okay. What I was going to say was about range requirement. Let's say that I have the triggered entry right here. That's 83 quarter. Okay, the range requirement is that there is an unobstructed path to my first risk neutral scale. Well, 83 quarter is 86 quarter. Just barely the case. So, strictly speaking, that would have been a valid entry. But I can't help thinking that my mission here as a trader is your primary mission as a trader is to preserve your account and to grow it through compounding by the law of large numbers and your expectancy. We'll talk about that later, but back to this point. My goal is not to scratch. My goal is to reach my profit target. But here's RTH VWAP, here's POC, here's the whatever the hell that is. That's the value area low. Here's the mid. Here's the Globex VWAP. Here's the developing value area high. Holy crap! There's a lot of things in the way before you get even near. A lot of obstacles in the way before you get near the profit target. In the case of the short, there was no obstacle in the way to the trigger. And there's only one developing value area low, essentially, and the RTH low, I guess. Not really an obstacle, but, a level for sure to the profit target. So, I don't feel bad about the trade. I'm just reviewing them. And what else is going on here? Where am I at for time? 2 minutes, 2 hours and 30 minutes. What have I got here? So let's talk about the monkey mind. What in the hell do I mean by that? Well, we are a product of our, if you're a creationist or an evolutionist, I think everybody agrees that the human species has been evolving or developing for a hell of a long time. And in the course of that time, we have developed a lot of innate wiring, right? FOMO, fear, desire to be right, those things, all of which are, generally recognized and bad problems for traders. My view of that and the way I deal with it, and hopefully it comes across in the narration here, is absolutely I have all the same ones, and so will you forever. You'll never eliminate them from your thinking, that I don't believe. But what you have to do, absolutely, is be vigilant and recognize that the minute it starts, the minute FOMO starts, or as Tom euphemizes, Hyde starts whispering in your ear, the second you recognize that, you be sure you don't react to it. You don't trade on that. You go, oh, hi, Hyde. How are you? Everything cool? No, I'm not going to FOMO. Thank you. I'm not going to chase that trade. Thank you very much. That's what you have to do, in my opinion, to deal with the monkey mind. And it's never going to go away. So, sorry about that, but, but that's where that's at. So that's, I don't know, any other way to approach it or to talk about it. And the discipline, these people that come to the, they'll DM me or something like that, I can't stop over trading. I don't know what to do. How do I, dude, how old are you? Don't overtrade. It's just, to me, it's that simple. Do you light yourself on fire? No. Do you overtrade? No. Why? Because you're an adult. You're not a little kid anymore. I think that's an important that's an important perspective to reaffirm. I mean, every day you wake up and you do or don't do a number of things because you're an adult and you've developed those patterns. You don't, go to the bathroom in your pants. Okay? Same idea. You don't overtrade. Easy, I think. For me, anyway. Now we have another IB long trigger. Not to, get over my go to the bathroom in your pants thing, but right here was there. Now it's gone. And I don't think that that's a trade, for the reasons I've already discussed, that I would be interested in. The trade has gone away because it's based on the close. Now we'd have to go down through here and come back up again to have another short trigger. And you need to remember that these are just rules written by yours truly to confirm all of this stuff works, and that I can then now, and I am in the process of backtesting and adjusting, trying to find the best solution. So there you go. Anyway, you're an adult, you don't overtrade. You're an adult, you don't chase trades. You're an adult, you don't, give in to FOMO. You put your trade on, you set up your bracket that you think that you design and you work out with your clear, unmonkey mind affected, no adrenaline rush brain. Your trade package, you put that on, and that's what you put on. you will never see me move my stop away from entry. I might bring it up to break even at a certain point. After the vetting process is over and I've achieved T1 or per my trade plan, I could trail up my stop to lock in profit and move the target. For example, I decided, well, I think we're going to get down to the previous Globex low, so I move my target down there. And as price progresses, I trail up to lock in and protect that up below swing highs or whatever your trade management process is. But abso-frickin-lutely never move your stop away from entry. Oh, stupid. Think about it first. I didn't get a good entry here, and I speak about that. I narrated that clearly. Well, this is not looking very good because we're right in the middle of this consolidation over here. We're right in the middle of this traffic. The time to think about that was before I clicked the mouse right here. You know, consider where your stop's going to be before you enter. Don't enter and then, oh shit, I got to move my stop up here and go from 6 to 12 points. Because if you do that and you want to be risk neutral, then you got to take your scale down the same amount of points as you move your stop away. Two things will happen. First, you cannot use that at all in any kind of data that you're capturing because it's not consistent. And second of all, you've just blown your risk reward ratio out of the water. Again, adult. Okay, now we had a short trigger over here. Yeah, I'm telling you. I just don't think that it's a plus environment, given the fact that we're 20 minutes into a cabinet meeting. And there are so many things that they are trying to put forward, rate cuts, let's bomb Portland, Oregon, or whatever the hell, let's declare war on Portland, Oregon. I'm going to get a peace prize because I've negotiated, the peace in Gaza, whatever. Like that had anything to do with us. I mean, really. Strictly orchestrated to show that, Israel been killing people right, left, and center, and all of a sudden it's okay. All of a sudden it's a great idea. And this is the same thing that was thought of forever. How many countless times?
The IB low is taken.
But there's a reason for it. Anyway, so that would have been a viable short. And they're just kind of barely scaled. But I just don't think it's the right. My discretion says it's not the right thing to do with this cabinet extravaganza going on. We had a VPOC migration, bigger one, then the full session. Now, see, here's where moving your stop would have gone. Well, you go, I'm moving my stop above the VWAPs. So you do that, and it goes up here, and it goes up here, and it comes down here, and there's your trigger. There's your scale. That's stuff you would remember. That's what I would remember. I continually tell myself no.
Hey, the IB low is taken.
Am I feeling FOMO right now that I want to have taken this trade and be, redeeming myself for this stop? Yeah, absolutely. I can feel it right now. Am I going to do that? No. I didn't take the signal when it fired here, and I'm not going to chase after it or FOMO for it. If it goes down to the targets and beyond, what I snooze, you lose. I blew it. I should have. What that should tell me then is to take each trade mechanically when it triggers. Get the discretion out of the box. There would have been a stop. There would have been a scratch. There would have been
Hey,
a
the IB
T1.
low is taken.
And see what happens after that. That's how it works, I think. I'm probably all screwed up with the chapters now, so that's irritating. Funny how you get used to stuff like that, you know? I get used to the hotkeys, and now I'm stumbling all over myself. Well, and I guess I'm pretty sorry that I didn't take that short, huh? God damn. Gosh darn, sorry. Yeah. Boy, oh boy, and it's going to go right to the T2, isn't it? You bet. So that trade could have been re-entered right here, scaled, and off we go. Damn. That's the monkey mind at work. You know, it's real easy to talk yourself into and out of stuff. That's something you got to be aware of. And I'm over here, you know, expounding the belief that I recognize it, but I did manage to talk myself out of it. Am I sorry? No, because my reasoning is valid. I'm not going to go into another trade during a potential political risk event. I don't think that's smart. I don't think that's an A+ setup. Did this work out? Am I pissed? You bet. Pig's ass pork. Speaking of which, good bacon here. Islamic or Jewish friends, don't listen. Something that's important for me to share here is that I have mentally or intentionally decided I am going to take trades every day based on these signals. I was, in addition to, working on the being unsure and working on the back testing and blah, 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 I had gotten myself into a real bad paralysis by analysis mode. I'm not ever going to be an overtrader or one of those things. So I'm not worried about that. But it's important to get into the stream here, into my journal, that that has been a conscious recognition or epiphany and decision. Now, Rod and company have a setup that they, Harry and Rod, and I think Garrett have an MR actually have a setup that they use frequently, which is a V trade, a V reversal. I haven't vetted it, nor do I do that. And if you look over here on Mr. Boyland, it's a double bottom. It's a there you go. This could be a 3-bar reversal. That if you're looking at bar charts and you know those, that's something I am very aware of. That's a 3-bar reversal. But I am sticking with my boys here. I'm just happy that I've got all these indicators pushing to Bookmap now, so that's pretty cool. I can, well, yeah, I'm not going to bother with it. You need to remember with trading that the ox is slow, but the earth is patient. As long as you're making progress one step at a time, you're making progress. And that's the way I operate, try to. I mean, that's my goal. just like with the stops and the risk reward ratio or the R factor or whatever you know, whatever acronym you want to use. And that I only take risk neutral trades, and then I vet the trades and I only take those, and you know, all that kind of stuff. That's not just something that I woke up one morning and all of this fell in my lap. This is, you know, this has been building over time. So there you go. Let's have a little Mookie. Let's put a little Mookie on the subject here. Antonio must have got bored and took off. That's just Panda didn't sing to him enough. It is boring. I mean, the stream is boring. There's no question about it, because this is trading as a business. This is not a video game. And let me also say that this stream is nothing about my way or the highway. If you have a way to trade that's consistently profitable and you use, you know, one monitor and a 5-minute chart with no indicators, no volume, no nothing else, and you're consistently profitable, great for you. Don't change. And, you know, drop something in the chat and tell us all how to do it. I'm always on the lookout. No question about it. This is where I am with my trading development around futures using these tools at this point. You know, that's that.
IB low is taken.
I don't know what I was saying, but I hope I wasn't doing that on a mute mic. My point was, there was the short trigger and an accurate one, because we've got an A, we got a B, and we got a short trigger. Scaled almost to profit target. I'm fast approaching the point where I just turn this damn thing on and let it fire automatic. But in order to do that, I would have to reassess all of the parameters, and I'll show you on the back testing after a little bit. What was I going to do now? Okay. Let's go through the trading as a statistical business. It's a good place to be doing that. Here's two more triggers that I am now apprehensive about. They're still on the stage. We're getting kind of rotational here, and we've had two short triggers, right? Do I take one and hope for a scale, or do I get spanked twice in a row? Bad. What have we got for VPOC migrations? We're at 7716, so we've got to get, well, we've got to get about 600 down here to bring the VPOC down. And here is our trade up, and we've got the VPOC, the VWAP, and a whole bunch of crap up here. Yeah, okay, here's the signals, and of course, it's rear view mirror trading. When I go, oh, look here, there was a signal, and boy, we would have been great. I didn't take that. I didn't actually see it. I was out of the room. That's rear view mirror trading. That's complete BS. Here's two more. Here's three more signals. Why aren't I taking all of them? This is the hard right edge of the chart. This is where you need to make a decision. Not here. Here. What are we going to do now? We're going to go up, we're going to go down. What have we done? We went down, we went up, we went down. What are we going to do? Likely maybe. Tom has a price check at aisle 3. Means they come through here and is this still too high? I think that's how he says it. It's cute. I mean that affectionately. He's got a lot of cute sayings that I like, a lot of clever sayings. No, that's why I do the plug and the snap for the Traders Lab every morning of every trading day and have for years. Is this an entry for me? Absolutely not. The entry was here. Am I glad I didn't take it? I'd be stopped again. So I'm going to defer to the random wristband as performing live in the cabinet room. No, I'm going to wait till that's over. Okie dokie. Trading as a business. That's a good one. I guess it's quiet enough now, and they're on the stage back there, so I'm not going to do something now. I'm not going to engage now. So let's look at this from the beginning. I've explained the top secret, highly valuable blue line that I don't trade against context, and that I am systematically and methodically vetting one setup or setups at a time statistically, so that I have them in my trade book or plan or clip or whatever reference you want to use. Sports, guns, dating, and who the hell knows. in my trade disco. In my trade square dance. There you are. So the first thing that you have to come to peace with is that this is a random environment. And to imagine that you can accurately predict an outcome in a random environment is setting yourself up for an unpleasant experience, I believe. And it is not been proven out by many people who have come before. It is a random environment. Just stop and think about it for a minute. Think about how many millions of people or traders are engaging with this market right here, right now. And imagine that they could all be acting in concert. Of course not. There's a million different actors here. It's also a statistical probability, a statistical fact that the outcome of the very next trade is 50-50 because this is a binary event. The price can only go up or down. That's 50-50. And essentially then it's a coin flip. So The way I think that you need to approach trading as a consistently profitable business is to realize those facts and identify some pattern and the criteria which justify the entry, as I'm doing with the IB trades, and then you capture a statistically significant subset of those instances, and they have to be identical. You can't have a 3-point stop this time and a 5-point stop the next trade, or move this target or something else. They got to be the same in order to capture them and have them be valid in your data set. A data set needs to be large enough, a large enough number of occurrences that it's outside random distribution, best you can do. Random distribution is, we all know that a coin is 50-50. Flip a coin 10 times. Is anybody surprised that you have more heads than tails or more tails than heads? No, nobody is. That's random distribution. Flip that coin 1,000 times and you're going to be pretty close to 50-50. 10,000 times, probably be right on. That's the difference. That's why looking over a larger data set of occurrences gets you outside of those. And I'll show you an example here with the backtest itself, where we have concurrent wins and concurrent losses. In other words, 5, 6, 7, 8 losses in a row. Same way with winners. That's random distribution. Okay, so once you've identified that and you have captured the statistics, then you can mathematically determine if that setup and those criteria have a positive expectancy or not. If they do, you rely on the law of large numbers to compound that expectancy to your bank account. In other words, you take every one of those that presents themselves in the live market. Now, that's not just some epiphany I had. That is the realization and the methodology of the most successful hedge fund and traders and managers and traders in the world. Ed Thorpe, Jim Simmons, Paul Tudor Jones, Ray Dalio, Tom the Trader, the best loser wins guy, Tom B, Rod, Garrett, Harry, whoever you pick that's a successful, consistently profitable trader, they realize absolutely that you have to trade based on statistics and probabilities, not hunches or gambling or anything like that. Also, probably recognized, it is the exact business model of a casino. From the gaming industry point of the house, they play no game on the casino floor which they have not predefined very definitely as an edge, how much that edge is. And then on the casino floor, their only mission in life is to play that game as many times as they humanly can in 24 hours. In other words, they want to capture as many occurrences as they can to rely on the law of large numbers, which is a real thing, to manifest or compound that edge or that expectancy to their profit side of their balance sheet. And that's what we need to do as traders. You have to, they know that there will be gamblers who win. We know we will take stops. But if you are taking a setup which you have predetermined has an expectancy, a positive expectancy over, a sample set that fits within your account, then that's the way you trade it. Take every one of them. That's that's important, and that is I think that's the key. That's the holy grail, actually, to trading. And to take it a little further, this win rate bullshit these internet guru guys go through, that's just clickbait, meaningless clickbait when taken on its own. As part of the expectancy calculation, it's very meaningful. But these guys, I got a 99% win, 95% win rate, this 1Trade, blah, 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 blah. On the internet, YouTube, wherever it is, it's just clickbait. You can have a 95%, win rate and go broke in 10 trades. Blow up your account in 10 trades if your risk reward or your R factor is upside down. If every time you lose a trade, you lose 10 points, and every time you win 1. Think about that for a minute. That's upside down. My win rate is about 2.25 or 2.50 wins to losses. In other words, if I risk 1, my R1 is 24. My risk, which is negative, is 24 ticks. Right there. When I achieve both profit targets, T1 and T2, in other words, it's a winning trade, not a scratch, that is 60 ticks. So about 2.24 reward to 1 risk. The R factor is about 2.25, 2.24. That's how you can compound it, and how you can have a consistently profitable business over time, I believe. And remember, this is just me talking to me here. So there you go. As far as the win rate and the expectancy and all of that, the way win rate is meaningful is if you're going to use it in the calculation of expectancy. And the way that calculation works is as follows. It's the win rate times the average winner minus the loss rate times the average loser. If that number is positive, that is the amount of ticks or points, however whichever increment you've used, that is the number of points, let's say, or ticks in my case, that you should expect to win over a data set of how far back you looked. That's expectancy. Then you can figure out Sharpe ratio and stuff like that. So in that context, yeah. In that context, excuse me, it can be viable. Wait a minute. Let's do this. So 3, 15, maybe. No, 3 again. So hopefully I'm getting these chapters, pretty well ironed out. Let's hope. All right, so at this point in the game, I guess we can look at the backtesting. It's only been an hour. I can't imagine they've got a cabinet meeting wrapped up and they're through talking, but let's look. Let's hope that now he's signing a Columbus Day proclamation, whatever that means, and tariffs, so he's still busy. He's still hard at it at 11:06, so I'm not worried about it now. Then, okay. I'm not going to put that risk on, absolutely. So let's look at the backtesting story now. And here we are. This is my backtesting tab. This is the coded trade system for the IB trades. There are 4 of those trades. There's an IB continuation from the IB high, there's an IB failure from the IB high, and similarly, there's an IB failure from the there's a failure, IB failure trade from the IB low, and an IB continuation trade from the IB low. The trade I took this morning was triggered and signaled as an IB continuation trade, and it got stopped out. And here would have been a second one that would have gone on to a scale. So there you go. The way the backtesting works, now this chart has nothing to do with the trade rules, except that each one of these custom indicators that I put on or built, or these custom signal markers, represent exactly what would happen in the trading system. But something firing over here doesn't enter a trade or have anything to do with a backtest result. So there you go. Now, the way the backtesting story works is, and why I find this really advantageous, I started building this thing originally because I wanted to be able to expeditiously backtest manually by scrolling back. That's what Rod and some of the other guys do, supposedly. And I couldn't see exactly if these rules were being hit specifically or not. So I built this kind of thing so I could just see it, right? I didn't, and then I put the signals on now, which is even better yet. Then I realized that was slower than second coming of Christ, so I was gonna, I'd have to be older than Methuselah to have a statistically significant data set or have these 2 trades vetted properly. So I got dug into this, and this works well. It's the sequential setup for those 2 trades based on, and these signals represent these various signals here. Now here's the beautiful part about it. Let's backtest 10 days. How long do you think that'll take? Let's see. This will not push to the chart because I don't want to do that in the live market. I can do that here. What I'm going to do now is backtest. Boop. Took 1 second. It tested every one of these rules over every 1 minute bar for the past 10 trading days in the RTH session. What happened? 18 trades, 9 long, 9 short. What happened over here? Come on. Trades per day, blah, 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 blah. Now, here's an important one that I look at heavily for a couple confirmation factors. I should not have more than $750 profit in a day because that is both profit targets. I better never have more than $300 loss in a day because that's a full stop on 2 contracts. All this is based on the 2-lot risk neutral package. I had 18 trades, 8 were winners and 3 were losers. I have a 2.23 R factor or profit ratio. Now this is I am a little bit skeptical about this, whether I accept this profitable percent or not. And I'll tell you exactly why. 44% was profitable. That means that 48 divided by the total number of trades, which includes scratches, is 44%. we really had 11 total trades. So if you divide 8 by 11, you're up to 80 or something % win rate. I believe this is probably correct because Chad's a smart guy, knows a lot about statistics, and he coded this up. But I have to think about it. You see my point. We have 11 trades and we have 18 total trades. That means we have 7 scratches, a winner and a loser. But I don't know that that would impact necessarily the profitable percentage. I guess it would over the total trades. Oh yeah, I guess that's acceptable to me. And then the next part, which is really a really good part that you might be interested in, is you can confirm as soon as you get down here and this thing stops jumping and jerking around. Come on. You can confirm each and every trade. At the 29th of September at 10:18, the first trade went on and it was an IB continuation short, and it took T1 and then it stopped and it was a scratch. Oh, look at there. And on and on. Here's T2. Here's the second trade on the 30th, and it's the IB failure long, and it achieved both profit targets for $750. And here's a full stop. You can go back to the chart. You can look at each and every one of them. You can do anything you want to do. Pretty cool, huh? Now that to me is data. And I can therefore just determine that I have over, this is peanuts because this is, that's what I wanted to show you. Damn, I hope I didn't close the wrong thing. Oh, maybe that was it. Hold on. Yeah, here you go. Consecutive winners in a row, 7. Consecutive losers in a row, 2. This is random distribution, 7 winners in a row. What you need to look at is a wide data set, right? I think, in order to determine an edge. So how you would do this then is you would take the average winning trade times the percentage win rate and subtract from that the average losing trade times the loss rate, average loss rate. And that would give you the accurate expectancy. Oh, didn't mean to do that. Gotta get that down so we can get rid of that guy and then get rid of that guy. Jesus, how long has that been sitting out there? Okay. Now, that's all well and good, and that's 10 trades. I can scroll back and look at 10 trades pretty easily. But let's do this. Let's look at 500 trades. 500 days. How long do you think that's going to take? Five seconds to accurately go through each 1 minute candle with all of these rules and evaluate them for 493 days. And all those same metrics occur over here. And you can go through trade by trade and the whole story. That's the advantage of backtesting. There's a second advantage, which is also pretty really important. And that is to backtest, optimize the strategy, and then forward test. And the way you do that with IRT is you set your backtest up from beginning to the 1st of or the 31st of December 2024. Then you backtest it. And then you optimize that strategy, however you want to do that, as many times as you want to. And then you forward test. You take the optimized strategy and you backtest from January 1st, 2025 to present. So you have taken you backtested over historical data and optimized that strategy. And then you forward tested over read or unreviewed or unused data in the future. So you see if an optimized strategy from last year back 5 years or whatever would apply in this current market that we're in. That's back and forward testing. And now I am not a good enough coder, Python or any of that stuff to do any of this myself. I tried. I was able to code up the risk management set, 2 contracts, targets, all of that stuff, and pull in futures data from IRT. And I was getting to fumbling around with the rule. I hadn't even gotten close to sequential rules like this, but things like the original, some of my original rules, which were just all one-liners. And I realized I was just going down a rabbit hole of Python, number one. Number two, I was using backtest.py. And I kept getting funny results. So I actually went to GitHub or whatever it's called and pinged the guy who wrote it and said, does this system work with futures? And he said, no. Because it was built for Forex or crypto, where they trade percent by pennies. So, and what it does not do, and the reason I was getting goofy looking data on the charting and stuff, was it does not know how to or cannot compensate for points and ticks and the value of a tick. That was the problem. So I just immediately fell back to this, and I figured, if it ain't broke, don't fix it. Learn how to do this, and I got this coded up, and there we are. So that pretty much wraps up a look back at the back test, I think. And we're still bobbing around with rules here and triggers and stuff, which I'm not going to think are applicable under this environment of the, we still have all this still going on. And, if this Gaza thing sticks, good. I think it's kind of funny how they're spinning this to be some sort of a huge accomplishment by Trump, because these are the things that have been going on in discussion for years. But yeah, whatever. I don't care who gets credit for it. What I care about is that those poor bastards can have a life. That's, I think, the key. And the war quits, people stop dying. And I don't even know who Hamas really is or what they represent, and I have no idea what this Antifa story is that everybody's pick up about over here.
Hey,
Okay.
the IB low is taken.
Ooh, we have a B now. We're going to get a trigger. Now, what would be required to have a short trigger IB continuation trade from this moment? We would need to trade back up here. First of all, this needs to stick here and have the B. We already have them, but, let's just go through this in sequence. We have an A way back on the, the IB stat. Now, price would have to trade back up to within this 1 point. These little dots here are 1 point either side of the IB. That's the reason you have a trigger there and a trigger here, because it closed up there. Huh? Here, closed in here. If we get that, that would signal a short again.
Hey, the IB IB low is taken. Hey, the IB low is taken.
No, he's there. Trump's really into his remarks now. So there's no way I'm gonna involve myself here.
Hey, the IB low is taken.
That's an unknown risk, and what impact will that have on the market? Well, here was a short,
Hey, the IB
trigger
low
and a
is
B, which I didn't take, and which I don't know what to think about. I think it's a bad idea to be engaging in the market with this this news going on. Sucks. Do I want is Hyde over here whispering, let's get that, let's get this back, let's make this winner, of course. all of that, but I have to weigh this as prudent or I'm not able to do that, frankly. And the trigger actually was here. So that's 80, 77, that's the scale. Hmm? You see what can happen instantly? Now there is another short trigger. But frankly, I think with the news that's going on and who knows what might be said, and you know, in kudos to the administration, I hope that it's a bunch of positive stuff about Gaza or whatever. I don't think they're being at all realistic about America particularly. You know, we're going to gut all the democratic programs, and we're going to fire thousands of workers, and we're going to, you know, stuff like that. A little grim, but let's hope this Gaza thing works out. The point being, I'm not so sure that a short in the light of the potential positive information would be the right idea. And look at what we're doing here, just on a bigger scale. Here, hold on. I'm busy looking at this trigger chart. Pretty whoops. I'm looking at this trigger chart pretty. Okay, what are we doing? Well, boom, 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 boom. It's like a megaphone, right? Well, first we have lower highs and lower lows. And now we're kind of having a focusing or a consolidation, maybe easier to see over here. Hi, Panda. What do you want, baby girl? What a stupid question. What a stupid question, Panda, isn't it? And of course you can look back at any of this stuff and say, oh, if I shorted there, took the trigger, shorted there, I'd be scaled, which is correct in some cases. I was not right here. Okay. You got off the table and you didn't want to sleep with Mom and Lucky? Why? And I'll be honest, I don't know what to do about it. I don't know which way to jump or which way to think about that. So I will defer to doing nothing rather than trade like I'm killing snakes. See what I mean? Even over here, it's just consolidating, winding up tighter and tighter. Even from here on a larger scale, if you were to draw a trend line. What's down here? No, man, you understand. I had to blink my eyes for a minute. It didn't look like this thing was moving. They must be getting ready to close the remarks, or I don't know.
Hey, the IB low is taken. Hey, the IB low is taken.
Yeah, I don't know. I don't know. Maybe I'll get my code going over here for my IB lows. Man, what are they doing? Higher lows and lower highs. That's a megaphone. Hate that. I hate that. We're getting, we did get a short trigger, but for the IB continuation short. Right. I'm still pretty spooked about the boys in the band over there. Yeah, here we go. This is the kind of stuff we don't need to have happen. He's so full of crap. Gasoline below $2. I mean, really. If you know anything about the oil and gas business, you'll know that this is as realistic or on the same level of clickbait for a specific group of people as win rate in YouTube or X or whatever. I'm sorry to say. So I don't see anything positive here. Most importantly, this is still going on, so I don't see anything. I will wait until these comments are over before I try to engage here. And that ought to be some pretty sound advice for anybody. Look at this mess. Look at this thing. And will it break out one way or the other? Probably. Probably rip. But trying to position for that, in my opinion, is gambling. Because it could just as easily go either direction. And one of the things to think about, here's the IB migration, here's the full session migration, here's the VWAP. What do you suppose is right here? Stop central. All this fuel. Now, the minute I said that, here we go down. And may continue to do so. But, that's the first thought that crossed my mind. When are they going to come up here and take all these stops of all these people that are betting on the short? The reaction could well be just based on the comments in the press deal that's going on, whatever it is, cabinet meeting, and I guess comments in conjunction with that or something. I'm not sure if I had that on mute or not, but there was a trigger. This is not eating my own dog food. There's a trigger. There we came. Now, is this going to be a 3-bar reversal and up the other way as this? Ooh, as this one was? Maybe. But quite clearly scaled and then waiting for the target. Oh yeah, there you go. Just all fun. Well, it's boring. I'm gonna have another short trigger in a minute.
The IB low is taken. I'm not real warm and fuzzy with trading between 12 and 1. Look at these days. Tuesday, Wednesday, Tuesday, Thursday. Hey, the IB low is taken. Hey, the IB low is taken.
This is trading on the hard right edge, and this is rearview mirror trading, and it sucks. I'm vigilant now about FOMO or revenge trading or, disappointment. So I need to be aware of those emotions and their potential impact on my decision making, which is the key thing. And these guys are just intent on pissing me off, making me feel bad over here. Really does disappoint me tremendously. You'll never know. All right. I'm gonna stick to my schedule here and get out and get the 3 miles in. This is a opportune day for a 12-to-1 stat, perhaps. And that says that if the market is out of balance and we put in a new extreme between 12 and 1300, that there's a high probability that will be exceeded in the balance of the RTH. It's pretty much exactly like the IB statistic, only it's, it's pinned around 12 to 1 rather than the IB. And I'm thoroughly disappointed with this freaking day so far. Well, there's the stop, and then there's the trigger, and then there's the this. So, the joy of trading. I'm going to head out. Do yourself a favor, get up, do some push-ups, do some pull-ups, go for a walk, rest your eyes, look down the street, something. Remember, you are the most valuable tool you have in trading. I'll leave this story on the book map. Throw on the next something or another for music here. Still no word that that meeting's over with. I suppose it is, but no news. What I see. Maybe somebody else sees it something different. But Well, good morning, or whatever it is. I'm back. And what did we do here? 12 to 1 trade? Well, it would be in play, the stat, because there's a low. There's an extreme between 12 and 1. Are we going to take that extreme out or exceed it? Probably. Still out of breath here, sorry. I said it helps if I take off the mute. So here we are. This is the day and the signals. There's my short and my stop is up here. I should be able to show the trade on the trade viewer, but I'm a little apprehensive. The actual trade as taken. Let's see how this works. Okay, hold your fingers. Hold your fingers crossed in case it blows up here. I don't see it doing anything. Okay, well, I guess that's not working right. I got to figure out what the trade viewer is all about. I gotta remember how to do that. I don't ever use that thing. Obviously. Yeah, I don't want to mess with it. I don't want to take a chance of turning on an active account and having this thing start doing something I'm not prepared for and I'm not up to speed enough to know, frankly. I did have it working right. That's the reason for all of this stuff. I think I'll leave well enough alone. We know what I did. That's very clear right here. There was a signal, the trade. I should have waited a little bit. It wouldn't have made any difference, to be honest with you, but it might have made a difference in the scale. The entry is here, and it did touch the IB. That would have brought the scale up about here, and it's possible that that trade would have scaled and not stopped. There was T1, there was T2. It just, it didn't go there. Went up here, tested this, and then came down and took them both. Or well, it got down here and got them both. That's trading. And there's the results exactly. RT seems to be having some issues here. And I don't think I want this on here. Why I was trying to edit the button and see the parameters of that. What it's doing is it's clicking the button every time. When I want to edit the button, watch the button. There we go, now it works. Now what we're going to do is get rid of that. I don't want that there until I know what it's going to do. You know what I mean? So this is pretty disappointing, but I suppose this will be the culmination of the day. The trade and stop, I guess. Well, here we have another, wait a minute. No. I almost made a big mistake. I was going to go, oh, we have another trigger. Helps to look at the clock, huh? Okay. Now it's a little better. Come on, you son of a bitch. See how the mouse just won't let go? Isn't that irritating? It's irritating me. Okay. So, now what? Nice day out for a few mile walk there. That was nice. Real fortunate to live in this neighborhood right here. It's calm and lots of big oak trees and stuff. Pleasant and convenient, you know, up and down series of streets that go down to a cul-de-sac and back, and then down to a cul-de-sac and back, so you can walk 3 or 4 miles and never get too far away from home base, which is handy when I go with my wife or whatever. Okay, so let's see what the hell is going on now. Well, it ought to be pretty obvious what we're doing, huh? There's today. Day before yesterday? Yesterday. Today. Down, up, down. You know, they are just trading them, boys and girls. That's what they're doing. It's called speculation. This right here means absolutely nothing to the value of the S&P. This is 100% trader speculation, which is what we do. Ask yourself this question. When you put on a trade, do you care what the value of the S&P is or where it's going to be next year? Or do you care that the current price is going to go however many points you want it, you know, to your profit targets within the next brief period of time? That's called speculation. And I think you need to temper, how to say this. There are those who say, well, you know, the price is too high and this is the most agreed upon price by traders, and is this the value of the S&P? I don't think any of that is really the point or the case. I think the case is, can they get the majority of retail primarily offside and then get their, and then adjust their inventory and make money? That's how I think it works. I don't know. And that's just me, And with that and $5, you can get a Starbucks probably. The saying used to go, and with that and a dime, you can make a pay phone call, but I don't think they even exist anymore. So there you go. What's happening now? We've already gone through the backtesting pretty thoroughly. I don't think I probably need to do that anymore. Maybe. Probably not. One thing that is pretty important along these lines is that, let me make sure I've got my timestamp thing all figured out here. It's real important to understand that this market, I was just talking about it briefly to do with the value and the actual value of the S&P, etc. Futures is a zero-sum game or business. I don't like to think about it in terms of gambling or games, or I don't like those kind of references. I prefer to think about it as a business. But anyway, that's, shoot your best shot. That's personal. It's a zero-sum game. And what does that mean? That, that gives credence to comments like Tom, the market goes up to go down and goes down to go up and all that those kinds of marketisms that you hear. And it's the truth. And here's why. Let's look at it on the bigger scale. Or even here might be a better idea. Look at the last 2 days. Oh man. Look at the last 2 days. The market went up to go down. And before that, it went down to go up. The market went up to go down and went down to go up and went up to go down. Why? On a bigger scale, different time frame. Up to go down, down to go up. You can keep going out as far as you want to go. Why is that? Well, it's because of the nature of futures at the base contract level. Futures is a zero-sum game. It is, the reason they call it a contract is because it's a contract between a buyer and a seller. There is no such thing as more buyers than sellers. It's virtually contractually impossible. If there's only a buyer and there's no seller, there's no trade. Simple. Or the other way around. If you hear some internet guru or some wizard telling you that the price went down because there was more buyers than sellers than buyers, and the price went up because there was way more buyers than sellers, you know right away that person has no freaking clue what they're talking about. To do with futures. How does the market go up or down? Aggression. If sellers are more aggressive and they cross the inside market and hit the bid, price goes down, and these are resting orders. This is resting liquidity, and this is resting liquidity. If price goes up because buyers are aggressive, they cross the market and lift the ask, and up we go. What else does that mean? Well, that means that for every one of these up days, all of this buying, or look at today, for all of this selling, Somebody is on the other side of every one of those trades going along. Somebody's down here with a whole bunch of inventory long because they sold all these retail guys. Of course, I understand that maybe yesterday somebody was short and they got long up here and vice versa. Yeah, of course, they adjusted their inventory or they turned their inventory around. But the deal is, that's how it works. And what do you expect is going to happen if a whole bunch of Goldman Sachs boys or whoever it is sitting down here and they're long? And they've got all these retail people short. What do you suppose they're going to do, and how are they going to make money? They're going to take that price the other way. The market, all of these guys got short, and what happened? Somebody was on the other side of all those trades. What happened the next day? Yeah, up it went, and all these guys got washed out. Now everybody up here is short. All these guys are long because they sold all these people that are buying, and what happens now? Down we go. Simple. I think it's that simple. I actually believe that. So that's something to keep in the back of your mind when you think nobody is running to hit your stops. Nobody's doing this. However, you can, use good judgment and use common sense. Like I was talking about a few minutes ago, if, all of these people that are up here that are selling, wanting that market to go lower, where are they putting their stops? Most of them. What is the thing you heard when you started? You put your stop above the recent high. You put your stop above the recent level. Everybody's talking about the VWAP, the VWAP. Well, where do you, and if now I'm a big seller or a big buyer, and I want to get a bunch of inventory, what am I going to do? I'm going to trade into all these stops. Here's 143 of them that got hit. Here's 132 of them that got taken. Here's 649 of them. Okay? They're not hunting you. And another thing that's, if you're really paranoid, all the orders are anonymized. Nobody can see who's doing what. They're anonymized by an order, by a number. So nobody's specifically targeting you or the fact that you're who you are or whatever else. That's the basis of it. Now there are predatory brokers and platforms and stuff which have, if you want to find out about it, Google A book and B book trading and see what you find out. There's a reason why all of these new prop guys are switching to this Program X. It's Top Step X, it's Edge Clear X, it's all this stuff. You Google Program X and see who's developing that and what they did first, and look into a little bit about the A book and the B book, and those are all manipulative skullduggery from the FX market. But by and large, the futures market is the most fair and transparent market there is, because there is a centralized exchange, and I'm only a day trader. I'm not holding or rolling. So for me, it's the most fair and equitable and advantageous or opportunity rich environment. And nothing gonna happen for me today anymore. I took my trade. I did not take the second one, and let's review that. But I did it consciously, so I'm not entirely upset about it. So here was our A signal, our B signal, and I am, you can go back in the stream or whatever you want to do and listen to what I'm thinking. And here's the trigger, and I took it. And there was a stop right about there. It didn't have any follow through. The way these signals work is, first signal is A, right there. That's the IB statistic. Then for a failure trade, we want price to pull back up to the pullback zone, trade down to within the 1 point either side of the IB, and get this signal to go long for the long trade. If we want the IB continuation trade, that's this A. We need a B, which we got, and then we need a trigger, which is price pulls back to within 1 point either side of the IB, and there's a trigger, and that's a short. I took it just as I should have. And it, 50-50, didn't work out. Over here now, as is always the case, okay, here's a great short. Here's another one where you got beat up. The problem with these kind of signals like this and with looking backwards, it's the stock and trade of the internet gurus and the Twitter the Twitter twits and those people is, yeah, okay, here's that short signal, boy, and I got short right there, and look at what I did, all the way down here. Well, did you get short here? Did you get short here? How about here? How about here? How about here? How about here? I mean, that's the problem. Now, if you got short here, I'd be pretty tickled about that, because you got scaled and damn near to your profit target. But you see the point. You got to be, that's rear view mirror trading, and you've got to be working on the hard right edge. It's so easy in hindsight to go back and look at the opportunities and spout them out like you're a regular wizard, you know what you're doing. But that's not reality, in my opinion. The reality is to calculate the statistics and the probability of the setup and take it each time the specific setup presents itself in the live market, which is what I did. Now, I did not follow on. I didn't take the IB continuation trade or the IB failure here, which is signaled. There's the A, there's a bunch of B's, and there's the trigger. That would have been disappointing, but that's in fact the trigger. Any of these IB failure trades fell on their ass. Some of these IB continuation trades over here would have been nice, because you would have gotten scaled and likely would have gotten your profit target. But that's hindsight, man. That's, at the moment, would this have looked any different than this? Or this? No, wouldn't. And remember that this is only two setups, the IB continuation and the IB failure. There's 4 trades involved because you have 2 IBs, a high and a low. But then I've got to do another one and another one, another one. But that's how you develop a playbook. And it may be a situation that I have to become more aware of after the vetting process is over. Well, maybe I'm not interested in these IB trades, depending on the market condition. The reason I didn't get involved in anything after right here, frankly, and you can go back and check the stream. This was the beginning of that, where we had a really heightened probability of critical political risk. This is when the cabinet meeting thing started, and you know that at very minimum, Trump is going to have a lot to say. And he did. So, you know, I'm not going to hold into that. I'm not going to be in a trade during that. I'm not going to be holding in a trade going into the non-farm payroll. Same idea. It's got nothing to do with politics. It's got to do with risk and reality. So there we have that. Let's see what else I can do. Okay, we're in the world famous power hour here. I've got the pullback areas and the continuation areas for the IBs high and low now all in the book map from the signals here in IRT. So each one of these lines, I'm not going to do the 1 point on either side. That's pretty obvious. Everybody can catch that. There we go. Push to book map. And they are. There's the pullback high, pullback low from the IB low and the similar down here. I don't see that. We'll see in a minute. Give it a minute. So now, nothing for me to do at this point for my trade vetting process. I'm going to, I have to step away for a minute and get ready to launch right at 1500 when I close the stream. I've got to pick up a friend and help him do something. And I got to make sure why that's the high. There should be a low down here. And I'm not sure why that's not there. I'm going to check it out right now. But in the meantime, I'll be back and we'll do the recap at, I've gone through the backtesting, I think, ad nauseum. We'll come back, I'll get back, we'll do the recap and the market on close orders and into the close of the day. Thanks a lot for stopping by the way. Incidentally, I really appreciate that. Like and thumbs up, subscribe. Super. Get some feedback in here. That would be great. This is the backtesting. This is my backtesting chart, which is just a visual representation of the signal markers and the respective lines for the rules. And these are the specific rules themselves. This chart doesn't do these. It just visually represents them so I can confirm it. The trade I took today was, where did today go? Right here. There's the first rule A, there's B, and there was the first trigger for the IB continuation trade, which I took and got stopped out. And that's, 50-50. That is trading. It's well within the parameters because I have a 40-something% win rate and a 2.25-ish profit factor or R ratio on the IB trades. So, everything's normal. Nothing to see here, folks. The way that these backtests work, as I've shown before, but I can do it again quickly here, I guess. Let's see something here. Let me make sure I'm on the right everything. Oh, that's that sucks. I think. I just realized I was doing something wrong. Anyway, so the backtesting can just save you phenomenal amounts of time. And that's the key to the situation. That's the key to the whole thing. And you see that there are no signals, rules, or triggers that are will fire, have fired, or anything until we go into the close, I'm sure. So I'm not worried about that. The benefits of backtesting is you try to capture a statistically significant data set of these specific trades, and that means a minimum of 100 trades, better 1,000, but you know, do it manually by scrolling back or doing it real time, kill you. There's 500 days. There's the back test. Took 5 seconds. The computer completely traded all 5, reviewed, evaluated all 5 of these rules for each 1 minute bar, going back for the RTH session, each RTH session going back 493 days for the ES. 707 trades, 370 of them long, 337 of them short. Average trades per day, 1.43. It's pretty phenomenal, huh? And here is the maximum loss is the stop loss. I know exactly what this problem is. This is for May 1st. There's some issue with the data on May 1st, 2024, and I don't know what. But that's exactly why this is not why this does not say $750, which is the maximum you should make. That's the maximum profit on this particular risk neutral scale, a risk neutral package, which is a 2-lot risk neutral package, just like I set up on my trading platform Bookmap every day. So tune in at 8 o'clock in the morning, every morning, and you'll see the whole setup. There's the winning trades, the losing trades. The difference between 568 trades and 707 trades are a scratch. 2.23 profit factor, and this is the 35% win rate of 200. In other words, 252 trades divided by 707. If you want to pull out the scratches and figure the win rate against the loss rate, it's about 80%. So I don't mean against the loss rate. What I mean is if you want to multiply or divide 252 by 468, that's the profit or win rate over the trades not scratched. If that makes any sense. And the last but not least beautiful part about this backtesting is you can look at each and every trade and what the outcome was. The moment you entered 9th of November at 9:51, you took T1 and T2, you entered an IB failure long. Boom. Do that for every trade. Plot them, chart them, whatever you want to do. Pretty incredible. One of the beautiful things you can do with this is you can take a data set in the past, like say from the beginning until January 31st, 24, or I mean December 31st, 24, and you run the back test. And then you optimize the strategy for that data. Then you can do a forward walk on unvalidated or unprocessed data by running the optimized strategy over the time from January 1st of 25 to present. So you've backtested your strategy over a lot of historical data. not looking at the current data at all, and then you run that optimized strategy over the current data and see if it is applicable in this here and now. Pretty cool. That's going to save all the time. Then I can move on to the next trades. There we go. And I'm going to step away now to make sure I've got everything ready to go get Jakob. Okay, almost the bottom of that hour. The final curve approaches there now. What we're starting to develop into, of course, is a B-shaped profile, just like day before yesterday, which is long liquidation. What a surprise, right? B-shaped profile, long liquidation. P-shaped profile, short covering. Well, B-shaped profile, long liquidation. Gee, what a surprise. Short, long, short. You know, it's just pretty elementary. I'm not saying that it's easy, but I'm saying some of this stuff is pretty elementary. The difference, of course, is the execution. And that's why I'm so focused on the backtesting. And, you know, I'm going to look at this tonight. I'll be pretty interested to see if by changing my entry type or my entry position to the putting a resting order at the IB instead of down here where I had it at the trigger, would that have affected a scratch here? Because obviously the relationship between the entry, the scales, the stop and the two scales is fixed, right? Has to be fixed. At this point in the process. There we go. Around the curve. Okay. We're in the home stretch now. And here we go. Let's start with the reporting and the numbers. This is today's economic numbers and reports. This is investing.com. It is free. You can filter it to your time zone, what reports you want, what country, etc., etc. This is the one I've used the longest. I like the format here because it's clean, simple. It's got the current time. I can do a screen snap and post it somewhere, and there's no question. And, you know, it's pretty clear to anyone. Now, here's something that's interesting to me. Friday, they have put the non-farm payroll back on the schedule. 7:30. I don't believe that's going to be the case because the government is still in shutdown, and I don't think there's anybody in the BLS that's putting out statistics. And this was canceled early in the week, last week, by investing.com. It was taken off the calendar. Now it's back on. I'm a little puzzled. And the second, and then also, let's look at the second news source, which is Financial Juice. And I tend to prefer, as I said, this is the calendar, much like investing.com, and you can filter it. But it has a bit of a more squawk box feel over here. Look at this. We might need to throw Spain out of NATO. What the hell? Yeah, wow. You know, this is the reason I keep an eye on this. These are the kind of random, unanticipated or unknown, potentially critical risks to the auction. You never know what's going to be said or tweeted that could have a major impact on our trading auction for you and me at our level. Now, at 1450, this is where we will see the market on close and balance orders. And I might point out that next week is the beginning of earnings session again. Earnings season. So that's always fun. What are we doing for volume? Light. Very light. Only 434,000 contracts. Let's see if I'm right. Oops, wrong one. Sorry about that. There we go. Well, I'm wrong again. Something must be goofy there. 118% volume at this time of day. That doesn't make any sense. And I'll tell you why in a minute. And our ATR is 3 1/4. Now, so I'm looking at the wrong thing or something's up here. Hold on. That's 434,000 contracts on the ES. You see what I did? I accidentally clicked the ticker column, changed it. Now this is gold. And I'm thinking, Jesus, 300,000 contracts, 400,000 contracts in the full session for ES is ridiculous. It should be about 1.1, 1 point somewhere 2, somewhere in there. Oh, well, what a surprise. Look at over there. So now let's go like that. And that's how I typically have it. Ugh, football. Okay. Yeah, well, anyway, I got to the bottom of it and I was correct in my thinking. So there you go. All right. Well, anyway. Here is our RTA, or my higher time frame chart, which is the micro composite. It's very simply the RTH session, daily candlesticks. Wherever price overlaps, I draw a volume profile around them. By doing that, I get a high and low volume node, which are these red and green lines, and they push over to bookmap. I have a MCVPOC, and of course there is the naked POCs and all that stuff, but I keep all that off. It's a little busy for me. You can actually turn off the fractals too. And just swing high and swing low fractal. Boop, 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 boop. Those would be the equivalents of a zigzag. And the market profile. Once again, we have a B, a P, a B. Now, I will say that we pretty much got up to and tied or took out the all-time high, which is, I've said would occur more than once because I just happen to know from years of this. So here we are. Here's the blue boy, remember. And this line right here marks the IB high. No, they did not do it. Take it all back. Hush my mouth. Yesterday, we jumped up on the new all-time high. We got 1 or 2 ticks over the top of the ETH. Then last night, here we go. There's a new all-time high once again for the ETH high. I'm going to change this date to today from the 8th. I forgot to change that. Sorry about that. That was the previous one yesterday. All right. This is a naked volume point of control from, this was the location of the POC yesterday at the close of the RTH. So we can take that one off. These are the high and low volume nodes. There's the micro composite VPOC, may or may not change. Full session volume profile, which starts plotting at 1700 and continues through 1600 the next day. RTH volume profile, which resets at 8:30. These are the important notes columns here, which I go through all of this in the morning, okay, in the pre-market. I changed the column title to the name of the expected opening time. I enter all the probabilities, the statistics associated with the individual prices based on the open time. And then through the day, we update I update the migrating VPOCs just out of habit more than anything else. And yeah, here is the heat map. There's no indicators on Bookmap or IRT. And any lines or anything that you see here is absolutely logical and straightforward. You know, you don't need to wear a pointy hat with a half moon on it or have a magic wand or, you know, change your name to Gandalf or something. You can, this is just, it's not easy to trade, but it doesn't have to be mystical and complicated. People love to throw around a bunch of words and act like they've got some secret sauce. And they do have secret sauce, but you may not want to put any of it in your trading. These levels are just as they are. Overnight high, the IB high today. Boop, there it is. Previous RTH high. There's the open today. I mean, here's the overnight volume point of control. And that was the statistic we had in a higher than open, a higher opening higher in range. The probability of revisiting the overnight volume point of control was 83.4%. And guess what we did? We did that right at the beginning because we opened above it, traded down to it, and traded all the way through it. Easy, huh? The only line that can sometimes confuse people or level are the IB high and the IB low because of the naming. This is a holdover from the market profile days, and it stands for initial balance, high or low. What these two levels really, actually, and truly represent is nothing more complicated than the high and the low of the first 1 hour of the RTH trading session. Period. The mid is the mid. The RTH VWAP, or the Globex VWAP, the RTH VWAP, volume weighted average price, and the POCs, one of each, full session and RTH session. Also not mysterious. POC is, this line makes them seem complicated, but in reality, this is just a stepped line showing the position of price where the POC was in history today. The POC is just the price at which the most contracts have traded so far in the session. And knowing that, you can act like a real wizard, right? You can go, well, let's see, I think we're going to have a VPOC migration in a little bit down here to 66 because it's the or down here to say 67 because it's the next highest price from the POC now, right? There's 387. And here's 13.9. So we've only got to get 400 or 500 contracts right here. And the POC is going to migrate from here back down to here where it was before. Easy peasy. Now, the reason for these migrating VPOC flags is a holdover to my older workflow. I used to keep the scale on 5 minutes. Now I keep the entire range or session in view, which means I can see the entire progression of the POC. Previously, when it was 5 minutes, I can't. Where the hell was it before? I don't know. Well, it was here, then it was here, then it was here, then before that it was up above us, you know? That's where these migrating VPOC flags came from. And that's even less than 5 minutes. This is 15 minutes. Wait a minute. There's 5 minutes. So where has this line been? How do you know? Well, if you had these flags, you could tell, but I don't do that anymore because I find it much more informative and much better for my trading to have a firm understanding of the context of the full session, which is right here. That's the purpose for this top secret blue boy over here, which is nothing more than a vertical line I put in at the open of each session, period. And there you go. So the stream starts every day at 8 o'clock in the morning, Central Standard Time, and goes through 1500. To ensure complete and total transparency and accountability, because I will take no trade off the stream. So, there you go. In an effort to further the transparency, I share the entire monitors, not just the application window. You can see all any and all programs I have open at the bottom, the hours, minutes, and seconds, and the date, which ties up to the date. I don't know what else to do. That's about as much as I can say at the moment. Now there's one thing I'm a little bit, let me say this about the open of the stream. Every morning, every trading morning, the stream starts at 8 o'clock Central Standard, except non-farm payroll, when I open the stream at 7:15 instead of 8 o'clock. Because I want to watch and capture the non-farm payroll because it's such a impactful number on the market. I don't have any faith that we're going to have the non-farm tomorrow. I think it will require a settlement of the shutdown, and I can't imagine how they could get their thumb out and get an accurate number out overnight. Maybe, I don't know. So I don't think I'm going to be. I'm awake. I'm up at 6 o'clock. And if it still shows on investing.com, wherever that went, if it still shows that we're going to have the non-farm payroll tomorrow on investing.com in the morning early at 6 when I'm up, I start posting the news. And more importantly, if it has been brought forward to the financial juice, then I will probably start the stream at 7:15 rather than 8. And we'll have, the University of Michigan numbers and all those as always, because they're private. I think that about wraps it up. Now we're going to have the market on close and balance in about 3 minutes. So I'll just leave it like that. And thanks a lot for stopping by. I'm not monetized for the stream in any way. All this equipment and gear and time and everything comes out of my pocket because it's my virtual trading journal. But, smack a thumbs up or a sub, that'd be great. By all means, contribute to the chat or the comments. Yeah. Love to know where you are, what you think, what you trade. What? I've lived around the world quite a bit most of my adult life, so you may be living in a place where I lived before. Never know. That's always an interesting conversation. So we've got about 2.5 minutes for this number, or the, not a number, it's market on close imbalanced statistics. And then I will shut this bad boy down at 3 because I've got to skedaddle up the street and help a friend of mine. I have a Highlander and he rides a bicycle, for exercise, and his bike broke last weekend, so I'm going to help him haul it over to the bike shop. I tell him he ought to either buy a mountain bike that's built for, that's got some horsepower to it, or lose some weight. He keeps breaking this fancy Trek thing that he's got. Expensive bike, and I'm about once a month we haul it to the shop because he went riding it. He rides it on the weekends and broke it. It's funny. Not funny, but we make fun of it. Well, that's that. And then while we're waiting for this number here, let me say again that the most important piece of equipment you have in your trading office is sitting on your side of the monitor. You need to make sure you are fit as a fiddle when it comes time to trade, because you're the one who is seeing, thinking, and making these decisions. And you want to be and need to be doing them clearly and rationally and unemotionally. If you're going to recognize when your monkey mind kicks in and you start having FOMO and all these different fears, and being able to recognize that and then put them off to the side and logically and calmly and rationally make trading decisions, you got to be in the correct frame of mind for that. You can't be on tilt emotionally. If you go out tonight and get hammered till 3 a.m, I suggest don't trade tomorrow morning. You know what I mean? That's just common sense. Stay hydrated, rest your eyes. This is really terrible on your eyes because we spend hours with our short focus eye muscles clenched to the max to focus on these screens. Get outside, look down the street, get some, warm light UV, which heals the cones and the rods and all those things that are important to your trading. Much more important than your internet connection or how many 5K gazillion inch wide monitors you have, believe me. So there you go. And there was our market on close orders, and nothing happened, as has been the case lately. Here are the market on close imbalances. Oh, well, they're big numbers, huh? S&P 500 buy side 3,206,000,000 shares or contracts. NASDAQ 100 1,988,000,000. Dow 30 965 million. These are all buy side. And Mag 7 is 1,136,000,000. Now, the next time you're thinking you're real important and how your trades are going to, affect the market, and you're going to be sure you keep everything a secret, like some people ask me why I share what I'm doing and all these kind of setups and stuff. Here's a perfect reason. Do you think that anybody watching my trades or my trades, if everybody used the same setup exactly and put the same trade on, what is that going to be, 50? Do you suppose we're going to do the math on the dollar amount of 3,206,000,000 S&P 500 contracts? Every tick. Yeah. Kind of like they're hunting your stops. Maybe not. That's a different thing. And because, if all of the doofuses in the world, the millions of them, put their stop in a similar place, and somebody needs to get up there and and take on some inventory without moving the price, that's the place to go. Because that's a bunch of stops, right? That's where the stops are. So if you go plowing into a bunch of stops, you need 100 contracts, and you go plowing into 200 stops at a level, and you're going to get your inventory filled, and you're not going to move the market a tick. So that's the way it works, I believe. And something is still wrong with my low. It's not coming across here. I better figure out what I did wrong there. Must be the V pound, I guess. All right, so 52. We got about 7 minutes left here. I think I've gone over everything. The important part is be back around tomorrow at 8 o'clock. Or check, if you click the little bell thingy, I will, as I said, when I get up in the morning around little 4-6, if I see that that's still scheduled, I may kick the stream off at 7:15, as I typically do on non-farm, just to have it on and record it. If you click the bell thing or whatever, it'll let you know when it goes live, when the stream goes live. I think it's supposed to anyway. So yeah. Okay. Might make a difference. I had my V pound variables off, I think. Let me check. Oh, come on, thing. God damn it, IRT. I get so frustrated. I wish somebody could tell me, well, a lot of things, I guess. That's a pretty leading question, huh? Oh, man. Yeah, that was it. Okay. Well, that was it anyway. I've already got it fixed. And it's already propagated over here. It's already propagated. So there's the pullback zones, high and low. And there's the continuation zones, high or low. Now, yeah, there's the pullback. Okie dokie. Those are all four of these zones. This is a continuation zone from the IB low, a pullback zone from the IB low, and up above. Same thing from the IB high. And I'm not going to do the triggers. I've already talked about that. All right, we've got 4 minutes to go. I got to get the car all back seats folded down and the tarp stretched out and go get Tubby and his bike. Actually, he's got a really good and expensive 10-speed, but he's a pretty big and heavy fellow. He's a Dane. He's from Denmark. We've been friends and worked together for a long time. More than 11 years, actually. More than 12 years. When I was before my career evaporated there. But he'd be better off with a mountain bike. Some of us got front shocks and, a substantial frame. I don't have any idea what he weighs, but it's a lot compared for that little bike, I think. So there we go. I'll do some back testing when I get back. And a couple minutes. Here we go.
Hey, the IB low is taken.
Now we're getting all kinds of triggers here. And no, I'm not entering trades at 2 minutes to 3. That's for sure. Have a great night. Go out and do something for yourself. Get healthy. Remember what my little sermon about the most valuable tool you have in your desk, in your office, is on your side of the monitor there. Be sure you've got that well taken care of. Really makes a big difference. And I'm old, so I can speak from mileage talking here. One minute. See the market on close orders jamming in around here, the liquidity. I don't understand those. I gotta say, I don't understand the imbalance. If there's an imbalance of 3 billion contracts, buy side imbalance, in my version of English, that means there's 3 billion more offers to buy in arresting liquidity than sell. I don't understand how the market reacts in these moments at the close to those big numbers. I've got to Google that or, get to the bottom of that. There's 1,186 of them. You see that? There they come. There's 1,000 contracts parked out there on the bid. A long way from a billion, but, you get the point. And there you go. There is the cash close. Kazoom. Have yourself a great night. Get outside. Focus down the street or on the horizon or look at some pretty gal a few houses down or whatever it is you do. Guy, gal, significant, somebody's non-binary other. No, I don't know. So many names now, I don't know what to say anymore. But there you go. Have a great night, and I will follow up on that. Non-farm payroll. I don't know how to nail it down exactly, but I will. So have a great night, and that's going to wind it up until either 8 o'clock in the morning for Absolute Sure, or possibly 7:15. Have a great one.